IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the so this is a wedding dress which was not delivered.
Tonight is about the people.
Organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us.
Related queries. My name is Puneet Zaveri. With me today is Thomas Sarkar, and over the next hour or so we'll try and solve all the stock related queries that you might have. So do start sending them on the numbers that are flashing on the top of your screen. You can also off your screen as well. But before we do that, a very quick check of how the markets are doing, because yet again today started off with what the GIFT Nifty was indicating, a downtick of almost 150 odd points, but then we have cascaded into a much larger pullback today, so almost down 270. What's happening in the oil and gas space, and hence the increase or reduction essentially on exports of the excise duty on petrol and diesel has been something that's been considerably highlighted. In the morning, you did see some key stocks like Tata Motors PV continuing to be on the downtick. There are media reports speculating that there could be an impact of a couple of weeks on production for JLR. Today, also seen Bajaj Finance continuing their downward momentum, and so is Indico. While the IT space, some selective defensive pharma companies continue to do well, and ONGC. Other bleak picture, and that has continued with the PSU Bank Index yet again. The biggest loser, and the Nifty Realty in the top 3 of the biggest losers today. Nifty Realty has continued and over advanced decline ratio though very quickly before I move on to our guest. Shows you the broader market picture has been, another key factor on a day like this. You are seeing almost a 9:1 ratio in terms of 1.7% now for the mid cap 150. Small cap also down with a very similar percentage points. Let's quickly look at the BSE 500 though in terms of the gainers and the losers. While the seeing some big moves on Brigade as well, that 700 crore land parcel boosting the stock today. But on the losing side though, you're seeing Minda Corp, Sterling and Wilson Solar, AB Real Estate amongst the ones that are down and out today. So hopefully over the next 2 to 3 hours of the trading session, hopefully some momentum comes back into the market, but seems to be a bleak picture for now. Let me welcome in of research at Mire Asset, Sher Khan on the technical side. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first stock related query for today. It's on Larsen and Toubro. Our viewer is holding to 15-year view that he wants on the stock, Tapan, and he's asking, given the current uncertainty, what's a target that he could expect for the long term? What would your view be? Should he continue to hold?
As more than 35% their order is coming from Middle East. But I think if things get settled down in 1 month or 2 months, I think they are going to get more orders also from there. Of course, for 1 or 2 quarters, no, as already the viewer is for the long term, I don't think long term there is a problem. So I think he's getting a good opportunity to invest more. If he wants, he can start investing. And for long term, I think much better return will be available.
He's holding few shares, bought at a price of 270 rupees. Saumil, any medium-term view on this counter?
Yeah, at this point of time in the medium term, I think the trend is expecting a downside target of 200 levels in the medium term outlook. In the short term, yes, we've seen a good bounce towards the 20 and 40 daily moving average. Bounce could have a resistance for the stock. In the short term, a little positive, but in the medium term, I'll stay away from it.
Got the view, Saumil, and welcome to the show. Let's go across, take our next caller.
Yeah, good morning, sir. I'm having HBL Engineering shares for 900 rupees, average of 400 shares. So what is the medium and short term? Yes, sir.
Okay, got it. And you said you want a short-term view or a long-term view?
Short and mid-term view, sir.
Okay, got it. At 655, would you recommend averaging down at this point of time? Is there enough evidence to support that?
Yeah, see, I don't believe in averaging on your looks good to me, and in the very short term there is a little bit of negativity, a little bit of downtrend. It may retest 580 levels. Decline should be the strategy if you want to buy fresh. My targets would be around 825. If it sustains above 825, then the next target would be 980, 985 levels.
Bought at a price of 558. He wants to know whether should he sell this counter and invest the same amount in BEL or Reliance Industries for the next 1 year. Tapan, any view
Better to wait for some time now, because I think stock has fallen a lot, and I think BL also having a rich valuation, even Reliance. I think this will bounce back much better from here. So just wait in this stock only.
Got that view, Tapan. But the next query, and continuing with a similar theme, is from Sushila Beleri. Now she wants to know a view on MRP. Roughly around 179, almost close to 5,200 shares. What would your view be?
See, my view right now is very sideways to negative. I'm not expecting this. Not even expecting this entire consolidation of last one and a half month to break out on the upside now very in the very short term. The breakout levels would be above 192, 193 level. Around 170 has a very strong support. That would be the right time to buy. Hold on to it. I think once the correction or the sideways correction has completed.
Okay. Next query is coming in on BLS International from Venkatesh. He's from Hyderabad. He has around 100 shares of this counter, bought at a price of 320. He wants to know whether
Don't average it. I think currently the company is facing some issues also. The last result was not so convincing, so I think I'm better to wait for one more quarter. Again, the situation is not so great.
Caller for today, it's from Amchi, Mumbai itself. Vinod has a stock query for us. Vinod, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I'm a long-term investor, about 5 to 7 years. Do daily SIP over next couple of months, which could be predominantly from mid and small cap.
Okay, got that question, Vinod. Let me go across to Tapan then. Tapan, is recommend for the next 5 to 7 years? I know it's a very volatile time period, so there could be a lot of changes in that aspect, but given that, is there something that you would recommend for Vinod?
Yeah, I think he can invest like the banks are coming. Also NBFC, also there are some stocks like Aadhar housing finance, and also if you want some of the hotel stocks also coming down. Sirma, that is also a good stock. So these are some of the stocks which he can add it for small cap, mid cap for the little longer time.
Yet another live caller coming in from Vijayawada. Anjali, you can go ahead and ask your query.
Bimta Lab shares of 700 average of 900 shares. So what is the short term and long term target for this?
Okay, long term target.
Well, I think if I see the fundamental and all that, last year it's been much better. I think, but the stock has fallen a lot from the top. So better to wait for some time. I think things will recover.
Wait on Vimta Labs, what Tapan suggests. But the next question, Tapan, also coming to you from K. Parthasati. He's a senior citizen from Chennai, holding EIH in his portfolio roughly at 390 rupees. Do you recommend him averaging at this point of time, because the hotel space as a whole has seen a lot of correction? What would be your view?
Yeah, he can average. I think this hotel stock is good, and you see the coming to the domestic places only. So I think that is where this company will be benefited. I think the stock is good. He can average at this level also.
Right. Next query is enter for short term? Saumil, any defense counter that looks attractive on charts?
Defense counter, I've been tracking BEL and HAL, but in the then we can enter these stocks because it has already been falling now in the very short term. So let's wait for the breakouts on the upside of the if it sustains about 20-40 daily moving average, and then probably
there as well, Saumil. But the next question coming in, it's on a beaten down stock in that sense. Blue Jet is what I'm talking about. Let's pull up today's chart. Stock's down almost 4%, as well as the 1 year chart, and you'll know what I'm talking about if you haven't tried. So he is sitting on a considerable amount of loss at this point of time. Let's look at the 1 year chart very quickly as well. He wants a 1 year view, Tapan, on this counter. And there you go, almost down 22. Largely, Tapan, what would be your view on Blue Jet? Would you recommend Sabu to continue holding or exit this underperforming counter?
No, better to hold it. Company prospects will be good. Of course, the results are not been so great from last 1 or 2 quarters, but this sector is quite good. It will recover, and at this level, no, I think already much more is priced in. So
in from Sudha from Hyderabad, and she wants to know the fundamental outlook on Shakti pumps. Are valuations reasonable at this moment, and should she buy for long term, Tapan?
we thought that for all these pumps and all that, it will be a good news. But the problem is all these companies are facing lot of crash crunch and working capital issues. And if you see the last 1 year results of these companies, to this government, whatever they propose, I think Wabag and all that will be a better option rather than going to this company.
Got that view, Tapan. But the next query that's coming in now, it's on media reports speculating a 2-week suspension in terms of production till April 8th. Now, the story goes that they have informed the suppliers about the same, but largely FY26 has seen a couple. And then, a month's production lost, in the month of August and September, largely because of a cyber attack. So stock's been down and out in that sense. Now, Tapan, this counter now, would you recommend that, given that JLR is almost 70% of his revenues? Do you think it's a wise decision to average now?
We say the stock is down and out, and if you see this price, much more is already priced in, and I know that 2-week production stop is also is a problem, but better to wait, and if he is there for long.
Okay, a live caller coming in from Andhra Pradesh. Venkat, you can go ahead and ask your query.
Yes, sir, I hold Geo Finance 100 shares at the rate of 326.
Tapan, should Venkat buy more 100 shares of Geo Finance at the current levels to average it out?
Yeah, he can. And it's available at a good valuation. Again, yesterday news came that they of the department will be coming into profitability in next 1 or 2 years. So yes, I think he can hold the stock. From here, recovery will be there.
Siddharth Chaturvedi from Jaipur actually has a very interesting question. Global Health, Yatharth, Kims, as well as Narayana, Tapan. Which one is a preferred pick according to you? If you like multiple names also within this list, what would those be?
So I think then also if you wants to go, Nayana is good, even Yatharth is good. But honestly, I'm positive on all the four. So you can take as a basket. Hospital as a basket will do well from here. So anyone you can choose.
Uh, 100 office shares is what they're holding at a price of 380 rupees. Should average now, or any long-term view on this, Tapan? Office?
Office. Office space. Okay, office space. I think if I see here, see the problem is recently the quarterly results was not great, and I think this again the real estate is in a problem. Only you can take these, not at this level, of course.
Got the view, Tapan. But time now, viewers, to look at the BSE F&O setup now, because you've largely seen a day where it's been a tough one for the markets as we discussed. So you take today for the Sensex, some IT names trying to pull up strength, but largely almost 27 stocks of the Sensex down today, almost down 1,000 points, more than 1,000 points now. Consolidation at the 53,000 mark, but failing to hold it yet again today. Consistently seeing pressure on that aspect for the Bank Nifty today. But when you this very quickly, of course, these are some active contracts for the Sensex, but look at the key stocks that are on our radar today in terms of short unwinding, the longs as well, very quickly. TCS as well as Sammaan Capital are some which are seeing long build up in trade today. TCS just a tad about 2,400 in terms of the other key in terms of short coverings. You're also seeing the IT pack. So also continues to see that pack, but in terms of longs being unwinded, Growth Properties is under pressure today, down 3.4%, while Hutco is the other counter, as well as a short build up yet again being built. Just started to get momentum on Tuesday for the first time after that consistent pressure on this particular counter, and yet again losing that momentum very, very quickly as well. So these are some of the key query now that's coming in from Srikanta from Bengaluru. Wants to enter the pharma space, Granules or Laurus Labs, Tapan, for the next 3 years. Would either be on your radar?
Doing well overall, and I think the demand will be there. Again, rupee depreciation is happening, that is also actually helping Laurus, and the fundamentals are good, and their overall commentary is for long term.
Queries coming in from Pramod from Bangalore, and Saumil, he wants to know the technical view on Reliance Industries. Is it a good time to enter?
See, Reliance Industries have been very however, in the very, very short term, it has been in a very tight range between 1300 and 1400. So that 100 points range has been there. Now, I'll be expecting the stock to go down till 1330, and the next level on the downside would be 1305. These are very crucial levels to watch out for. If it does not sustain, around those levels, then there is a little bit of pain, but however, the structure, the medium term and the long term structure still remains positive. So I'll be looking to buy around 1270, 1300 levels.
Query for Ashri. Good morning. Welcome to the show. What's your query?
Sir, I bought India at the rate of 29,600, sir, 10 shares, sir.
One stock's trading at 26,000 now, and she's bought at 29,600. Should he continue to hold this counter, and if possible, is it a good time to average?
Yeah, you can hold the and the valuation is quite conducive. I think he can hold the stock, but yes, some of the other stocks also there in pharma which are doing well. So once it comes up on above 28,000, he can little bit on the pharma sector.
Time now for the rapid fire round in this edition of Ask Profit. Tapan as well as Somil request you to keep your answers on buy, sell or hold, so we can take as many in the next few minutes. The first question is coming from Mohit. He's holding 200 shares of HDFC Life at 599. Can he continue to hold?
ETC bought at a price of 404, currently sitting on a loss. Should he average or sell? Tapan, any view?
Sell on rise.
Tata Motors PV, we took the fundamental view. Somil, stock now?
I think I'll hold to it for long term, but short term, definitely there's pain.
Sunita from Hyderabad wants to know whether should she buy Ellen Berry Industrial Gases at the current level.
Bought at 505 Somil. He's asking if he should continue to hold or sell out on this particular move.
The book profit for short term, however, my view is
Bank bought at a price of 160. Should he continue to hold or sell? Any view on this, Somil?
Sell.
Oracle Financial, Tapan, a viewer has bought it. Ishwar has bought it at 6645. That's the only IT play in his portfolio. Should he add more now?
No. Sell on rise.
Motherson 300 shares bought at 65 for the long term. Should he continue to hold, Tapan?
Yeah, hold and buy on dips.
I will hold.
Prashant holds Dixon at 12,240 Somil. He's holding a considerable quantity of 126 shares. What's your view on the stock now?
Capri Global bought at an average price of 178. Should he hold for the next 2 to 3 years, Tapan?
Hold.
Somil, Tejas Networks bought by Ram at 516, a very volatile counter.
Graphite India bought at a price of 520. Wants to know whether should he sell at the current level. Somil, any view?
Hold.
Lemon Tree bought by Zakir at 125. Tapan, he's holding a 50.
Delhi is holding 2,000 shares of Patel Engineering bought at a price of 35. Can he hold for long term, Tapan?
Yeah, hold it.
Happiest Minds bought at 445 Somil by a viewer Lavanya.
Sell on rise, but the targets in the short term would be 500, 490, 500.
Got it. Well, that's the end of this round of the rapid fire in this edition of Fast Profit. But Somil, thanks so much for helping. Very short break.
हर पल मनाओ केसरी त्योहार।
सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture.
Talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा पर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs.
IIT Kharagpur, bright future, can get a good job.
Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा.
Pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors. And
what happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? Here we come.
India, a land of story and resilience. 1.4 billion hearts.
On WhatsApp, you can also call us, talk to us, as well as our guests on or your stock-related queries as well. We still have Tapan Doshi with us. Let me welcome in Rajesh Bhosle. He's the equity technical and derivative analyst at Angel One. Rajesh, bought by Lalita from Bangalore, who is a regular viewer, at 259. So she is sitting on a considerable amount of profits. Asking what she should do now with this counter. Let's go home with 100% gains.
As of now, I would suggest to hold on to it because if we see the weekly charts, it has precisely taken support. So this week it's witnessing price correction. But overall, chart seems to be forming a structural bottom. So hold on to it. Somewhere around 500 level, the stock has a strong support. So hold on to it.
The next query is coming in from Kishore from Hyderabad. He's holding 400 shares of JG Chemical, bought at a price of 375. He's a long-term investor.
It's the problem is with the profitability. There is a big pressure on the margin, and again the chemical business is overall not doing well. And I think lot of issues or banking which are available at a lower level.
The Vyutapan, the next query that's coming in right now, it's on United Spirits. Now, stock has been focused, is netting in a good profit for that as well. And if you see, this week has been very volatile in that sense. It's down 2%, but a lot of analysts put in a value to that entity of almost between 100 to bought 100 shares, Tapan. Ask if it's a good time to add 100 more. What would your view be on the stock now?
Well, the stock is okay, and as you told, RCB sold. Also, I think it will be conducive for the spirits and all that for the next few quarters also. At this level, if he is getting, yes, he can not 100 but maybe 20-30 shares, he can in part way.
Caller query coming in from Andhra Pradesh. Bharat, you can go ahead and ask your query.
Good morning, sir. I am holding 500 shares of Happiest Minds at the price of 445.
Okay.
So, actually, yesterday, Happiest Mind partner.
Okay. Any long-term view on this, Tapan? Happiest Mind?
Well, honestly, long term, I am not too much bullish on this stock. Already, if you see the margins are there in part of AI for this company. So my take will be, I think on rise, better to sell.
To sell Happiest Minds is what Tapan recommends. But the next question is coming in from Karthik now. He's holding BEML, but bought at 2494. He's currently sitting on a loss, a considerable one to add the least. But would you recommend, Rajesh, for him to add more at the
Definitely an underperformer, but now if we see the chart structure are moving towards its long-term support. If we see on the weekly chart, prices there was a rally from this level. So I would suggest to wait for now. If it dips further towards 1300 levels, that is the origin point of the last year's rally. So
holding few shares of BBTC, that is Bombay Burma, at a price of 1450. He wants to know whether should he add more or exit this.
Because the market is showing this stock is also falling. Overall, I think the stock has already come down a lot, but my suggestion is, because it's a holding company, many challenges will be there in the future. So just hold, and once it comes up, maybe 20-30% up from here, he can sell if he wants.
Got him. And continuing to be on our viewers' radar definitely at this point, but you're seeing yet again that the Nifty is broken that 23,000 mark. We broke that earlier in today's trading session, but yet again under pressure for the Nifty 50. The next question coming is from Anthony. He's a long-term investor. Has an interesting question. He's looking to enter Interact Building Products or Jyoti C.
Can you spell the name again?
One's Interact Building Solutions in the prefab building space. The other one's Jyoti CNC, Tapan.
I think Jyoti is already down, but I think in auto ancillary company sector also, they are in the aerospace and defense. I think this looks much more interesting. So if he wants, he can add this stock at this level.
Shares at a price of 490, saying that the current share prices are at 390. He's sitting on a loss. Should he continue to hold this counter or exit? Is there any chance of the share prices moving back to 500?
Depending on the government policies, if any change in government policy, it will hurt a lot. So my take will be, if it goes up now, better to get out from this stock and go to better stock.
Radar. 1,000 shares bought at 201. So, currently sitting on the loss. What would you recommend, Rajesh? Is there any upside momentum to what we're seeing in today's move?
Definitely hold. If we see the pharma space are showing relative strength, and even if we see PPL Pharma, it's forming an engulfing pattern on the weekly chart. It's on a strong around those levels. We need to revisit the chart, but as of now, it's on a strong support, expecting a strong up move.
Next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask.
फंडामेंटली स्ट्रांग है, मैं ये जानना चाह रहा था.
ओके.
कंपनी जो फंडामेंटली स्ट्रांग हो बिल्डिंग मटेरियल की.
तपन, बिल्डिंग मटेरियल स्पेस में आपको कौन सी कंपनी फंडामेंटली ज्यादा स्ट्रांग लग रही है, जिसमें अभी आप
LNG का प्रॉब्लम है, गैस का प्रॉब्लम है, तो काफ़ी सारी सिरामिक कंपनी डाउन आ रही है. उसमें एक कजारिया सिरामिक है, लीडर है, अभी थोड़ा नीचे आया है और आई थिंक थोड़ा वेट करके लेना. बट वो एक है कि अगर आप रखो से अच्छा रिटर्न देंगे तो ये कजारिया सिरामिक आप लॉन्ग टर्म के लिए इन्वेस्ट कर सकते हो.
होपफुली अरविंद जी आपकी क्वेरी सॉल्व हो जाए तपन के व्यू से. बट नेक्स्ट वन क्वेरी कमिंग इन ऑन I know it's a very limited time frame, but he's asking a short-term view of what could be your opinion on the stock. Any view here?
So after chart structure, so as of now we are seeing a higher bottom with whatever limited data we have, expecting a further traction possibly towards the levels of around 3100. So for a near-term targets of around 3100.
Shankar Mali is holding 2,000 shares of Praj Industries, bought at an average price of 400 rupees. Rajesh, short-term view on this counter?
Immediately there is a resistance around 335. Once that is taken out, we can expect further up move towards the levels of around 365 to 370. 290 levels.
Got that view, Rajesh. Praj Industry is, another very, very volatile counter in the last 1 year as well. But next caller dialing in from Bengaluru, Venkat.
I have got a query regarding NTPC Green. Okay, I have got 300 stock at the rate of 101. That is the average price.
Okay.
And is this? And is this a good stock to hold on for a long term of more than 1 year, or no? Can you average it out? No, at this price, because it has been falling down only.
Too much in terms of even brokerages as well. Largely, they do prefer a lot of companies apart from NTPC Green in the pure play space like Vari. Is that your view also?
It will be, as you told Punan, better to exit from this. Already valuation is on a higher side. Actually, when they brought the IPO, at that time only valuation was quite high and the stock is not performing. I think still better to switch from NTPC Green to NTPC. I think NTPC will give a much better return from here. So switch to NTPC rather than NTPC Green.
Okay. The next query is from He wants to know whether can he hold the counter for the next 3 to 5 years. Any view on this, Tapan? Natco Pharma?
Yeah, good stock, and I think good recovery coming again. You see from last few. At this level, I'm quite positive. You can buy at dips for long term.
The view, Tapan, but Canara Bank, Rajesh is the other counter I want to put your view on. Ramesh from Bengaluru.
I mean, day before yesterday, there was strong positive momentum in the PSU banking space. But today, along with the broader market, it has slipped again. But if we see, the stock is hovering. Hold on to it somewhere around 125, 124. There is a strong support. And once the prices crosses above 137, expect a strong move towards the levels of 148 to 150.
Rajani wants to know whether is it a right time to invest in Coforge for long term, Tapan?
No, I don't think so. No, because still we don't know where the AI enabled software. Of course, Coforge is good, but again the valuation is on our side compared to other large cap also. So my take is better to avoid and go to other good sectors.
Swansi, good morning. Welcome to the show. What's your query?
I want to invest 3 lakhs in this market correction.
Okay.
So, what any 3 from mid cap and small cap sector.
And Mansi, do you have any equity exposure right now? Is this you are entering the market now?
No, I have already exposed.
Okay, you have. But anything on your radar for Mansi?
Yeah, as I told earlier, then I think banking may do well. So banking and NBFC, these are the two sectors where you can go for NBFC or DCB Bank. Then I think EMS sector, where I told Sirma and maybe Dixon. Dixon, of course, is the large, so I'll not tell about that. And other sectors, I think hotels and hospitals. In hotels, I think Lemon Tree, that is also good. So these are some of the sectors she can think about it for long term.
Raghu from Hyderabad is holding 89 shares of NHPC, bought at a price of NHPC.
So I would suggest to add more, but hold on to the current position because since last 1 year, not much has happened in this stock, but somewhere some base formation. We can expect some momentum back towards 95 to 100 level. As of now, not much is happening, so hold on to your current positions.
Got that view, Rajesh. The next question coming in on ID. The stake sale might be off the table, and hence we've seen a correction on the stock. Should Suresh exit now at this point of time? Would that be your view?
Now reaching oversold zone and approaching its long-term support levels. So as of now, hold on to it. If we see the rally that started earlier, started from the level rebound from the 60 levels. So hold on to it, and when it bounces back towards 75 to 78 levels, we need to recheck the charts.
Rajiv Saha from Calcutta is holding hold or average. Tapan, any view on this?
Well, I think you can average. The stock has already fallen a lot, and if you see it is having a very valuation was on a higher side, but now I think it is much more reasonable compared to earlier. So yes, please add at this level. I have no issues.
Got your view, Tapan. But next caller actually.
Very good morning. I'm holding 750 ONGC shares, which I bought at 275 rupees. I would like to know whether to hold or sell and what would be the short-term target price.
Okay, you want a short-term target price. Got it. Rajesh, on ONGC, yet again, even in the short term, it has been driven by a lot of news flow happening in the Middle East. But on the charts,
overall chart structure remains positive on the higher time frame, and high top, high bottom is still intact. The kind of positive momentum is there, expecting a further move towards 300 would be the immediate targets.
well, Rajesh as well as Tapan and our viewers, it's time now for the rapid fire round in this edition of Fast Profit. You both know the drill. Let me go across to the first query on Lodha. This counter now and a target to watch. Rajesh, your view?
Avoid it. It's an underperforming counter.
Raghuram from Trichy is holding 150 shares of JSW Energy at a price of 487.5. Should he hold or sell, Tapan?
Hold.
Tata Power, Fortis or
Canada.
Rohan from Calcutta is holding 15 shares of Mahanagar Gas, bought at a price of 1,030 for the last 3 years. Tapan, should he sell or hold for long term?
Sell on rise.
Jindal Stainless is a good buy for Narayana at this point of time, Rajesh.
Is it a good time to enter RR Cable for the next 2 to 3 years, Tapan?
Yeah, good stock.
The next query that's coming in, it's on ITC, bought at 410. What would you
the Leela Palace Hotel for less than 1 year? Rajesh, any view?
I'm not tracking this counter.
Okay.
Any view that you might have, Tapan, on Leela Hotels, Leela Palaces? Volatile counter, do you track it firstly, is what Piyush is asking, and what should he do with this counter?
Avoid.
Okay, sign from
Chennai Petro, Rajesh, bought by a viewer at 845. This is Souvik from Kolkata. Should he continue to hold his 50 shares?
Let's hold on to it.
The next query, 2,200. Should he hold or exit? Any view on this, Tapan?
Hold.
DLF stocks at a 52-week low, Tapan, is what Mahalakshmi suggests. Should she buy now?
PL at a price of 440. Short to medium term target on this, Rajesh?
Hold on to it. I expect a bounce towards 440 levels.
Our viewer holds BEL.
Karthik from Chennai is holding 1,000 shares of IFCI at a price of 53. Should he average at the current level, Tapan?
No, just hold.
Bajaj Finance or Shriram Finance? What's a good investment right now? What would you suggest, Rajesh?
Shriram.
But Tapan as well as Rajesh, thanks so much for helping us solve all these queries. But viewers, before we wrap, let's quickly listen into FM Nirmala Sitharaman talking about the government's recent announcement.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर दाम विदेश में बढ़ रही है उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी
केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people. Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स
SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come to
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
Of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
Achha. You started also with a fairly small amount, self-funded. What were months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
Focus is then you also get a lot of feedback.
I usually start with my day, where one or few of the emails would just say that you have ruined my life. I want to shift and
politics. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable
The fairways of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition from surgical iron play for a celebration of skill, sportsmanship
watching KYC, that's Know Your Company, and today I'm not going to let you go through the hoops of guessing the company because it's a very interesting one in Veranda Learning. Now, the EdTech space has been very active. Start to look a very bit interesting for Veranda at this point of time, given that they've done a QIP just about 9 to 10 months ago, as well as the demerger that's expected very soon, and we'll get to that in just a bit. Which give them access to a lot more on the offline side of things. Now, of course, they serve the learners preparing for competitive as well as professional exams. For all those that are present in this space. Now, they operate across some key examinations of the government, CA, higher education, as well as the vocational segment, which is a very interesting one, also given the acquire 14 companies in the last 2 to 3 financial years, and hence building their scale across key verticals. Now, the revenue model for the company is very interesting because, of course, a fee-based admission as well as course enrollment program. The course enrollment also, of course, needs a little bit of marketing expenses, and we'll question that to the management. But when you move on and look at the other key aspects, of course, revenue grew by almost 30% to 470 crores. Has been a decent growth, but profitability has taken a hit, and we'll get to that in just a bit. NCLT has cleared % of the company's revenue. Why is that? Is that needed at this point of time? We'll quiz the company about that as well. And JK Shah Classes, as I mentioned, that the company had acquired, will be listed as a separate entity with brand sense for the current shareholders is something that's important to note. Also, the shareholders, of course, are scheduled to meet on April 24, 2026, which makes it very, very timely at this point of time to speak to the management. To simplify the structure, sharpen the company's commerce focus, and build the growth for the next vertical. And we'll continue to look if that makes sense for the future. Now, they have also the reputed brand name as well as the person behind the reputed brand name. Now, amongst others, the government coaching exam institution has looking to cross almost 100 crores of revenue as well. So this test preparation for the government exams is a key growth vertical for the company at this point of time. They've also recorded the highest ever annual intake of 50,000 learners in the history of as well as part of our KYC's 8 parameters, but largely a strong growth driven by the offline, the online, as well as the residential formats for the company today. Income statement will be something that we'll start with as well and continue to look at the other ones as well, like balance sheet, cash flow, as well as the company's shareholding as well. Continue to look at the other move on, look at the other parameters. Shareholding is one. We've changed a little bit in terms of the return ratios because it is a loss-making entity on an annualized basis. So we will be looking at the valuation income statement. Been a strong growth in the last year, FY25. Even when you look at the 3-year CAGR of 84% has been one of the major positives about this company. But look at the profitability has also taken a big knock in FY25, but this has improved in FY26. So there is some more resilience shown in this year. But because of what's happened, we've given the company gone from a loss-making entity to a profit one. Look at the margins though, 32% is quite decent. But revenue growth will be something that we'll focus on with the company. If the growth is 30%, which wasn't meant for a trade. That FY25 was a dip. You also saw the challenges because of Bioenergy as well as what happened with that space, putting some pressure on the margins. But Q3 was a positive picture nonetheless. A neutral rating for now for from profits don't go into the reserves, but still then the reserves have actually increased in FY24, dipped again in the FY25 to 183 crores, so has been a bit volatile in terms of that. In terms of borrowings also, that has steadily increased. Now this was of course to fund the acquisition also. They've done quite plenty of them, but 2022 is when they acquired JK Shah, but largely has improved in FY26, but neutral for now, even on the balance sheet. Let's look at the cash flow aspect of things now, because this is very important for a younger startup, younger platform company. 4 levels, FY23 levels as well. Profitability though has been a kicker in terms of weakness shown in FY25, and hence net cash flow has also been largely very stable, very volatile. I have to mention because of what we've seen in volatility as well, but pardon me, look at the operational highlights now. Continues to be a very important parameter for the company because the net enrollment that has been increased. Look at the last 2 years also has steadily increased from 1,50,000 to almost 2,50,000 in FY25, and a huge jump of 3,28,000. And this is of course a thumbs up. Shareholding, because of the QIP done in this year, shows a dip in terms of the promoter shareholding. So let's go across, look at the next parameter now, and shows you the big dip of almost 20%. Been very volatile yet again as well, but look at the next parameter, that is cred. It has been the other very volatile period because the company's earnings have also taken a knock. The last month the year-to-date returns also, it's steadily been very volatile, 26% downtick in the last 1 year, and very importantly, stocks trading at the same level of roughly around the 130 rupees. Investors, the people who invested in the QIP in July of 2025 was at 236 rupees. So you saw 100 rupee downtick for the company, even from those levels roughly 9 months ago. And gets very interesting yet again because you have now a listed peer in Physics Wala for the company. Now Physics Wala, a known brand as well, had a decent listing, but since then also the momentum has faded. Not profitable. You look at a clear comparison and a clear win in that terms for Veranda. But we are investors. We look at multiple sectors, multiple opportunities, and hence you have to care. The likes of the Eternal, likes of Swiggy, you are looking at PB Fintech. So the opportunity, while large, if it's lucrative on relative valuation, becomes the key question, and hence for more we expect essentially in terms of the outlook for the company. Multiple key aspects to look at. We saw the new learner additions has been quite strong. 1,000 crores in revenue is what they are targeting. 8 lakh plus enrollments by FY30 as well. Enrollment numbers have been quite strong, so this would be a very interesting to watch. And sorry, pardon me again, but the next one also, when you look at the key outlook, lends some more confidence to the company at this point of time, and hence becomes a very interesting aspect for them. But I spoke about the edtech opportunity being very friendly. And widening price structure is what everybody fought for, but now over the last 5 years we've seen competition waning away in terms of what has been a very highly competitive space. Formula in that sense, and gone back to look at the established names because of the serviceability track record as well. So when you look at the final ratings for the company, let's pull those up for all. In terms of the income statement, balance sheet and cash flow, we've given the company a neutral rating. Operational highlights have been positive, so we've given this a thumbs up. Shareholding, given the QIP, has depleted below the ownership. Street cred is a downtake because of the underperformance of the shares, while valuation and outlook are two key aspects, and we will be honest here, given it a little bit of stringency in that, but to the company, Suresh Kalpati, the executive director and chairman of Veranda Learning, is now joining in at this point of time. Mr. Kalpati, thanks so much for firstly joining in, and a very good morning to you. A very, very key crucial meeting at this point of time. How are you looking at the company's performance over FY26 leading into that meeting as we look forward to what's the expectation from Veranda in FY26?
On target. Q4 has been a fairly strong quarter for us, especially going into the last month. We expect to be on target to, 60 to 170 crores of EBITDA. So we are continuing to have strong performance across all our businesses, whether it's K-12, government test prep, or the is now combined with SNVA Veranda.
Mr. Kalpati, also the one big crucial aspect has been the demerger of the commerce vertical. Now, a very, very high margin business, and you've given a target of almost 1,000 crores in revenue by FY30. Does that include the commerce vertical, or will that be the non-commerce vertical which will be continuing to house under Veranda Learning?
Why we are considering and we have been pushing forward on the demerger. The first is to create a very focused business which is focused on commerce. No better branding degree of the newly listed company. We expect that to happen sometime in June. With the projected EBITDA for that business alone at about 180 crores. It's expected to achieve growth of about 30-35%. So it's expected to be a very strong listing. We expect that sometime in June. One of the key reasons that we look also from a fact that it is a space in which we have very few competitors, if you will. With even the last exams where we had over 100 with a pedigree of a brand which is over 40 years old, and alumni who are today the who is who in the financial services space, with a high level of profitability space is concerned. There is significant investments that is being planned purely coming from internal accruals to continue to build out. And as I keep leader in the commerce space. We have always looked at the other spaces where people choose careers, whether it's in terms of the medical profession through need or government is prepped for people who those are spaces which, in a sense, we feel is fairly crowded with very strong players who are already there. In the commerce space, J.K. Shah Commerce Education would be sort of like an undisputed leader.
Fair point. Valuation that you're getting for Veranda Learning for both the commerce and the non-commerce vertical doesn't justify the moat of the J.K. Shah brand which you've acquired roughly in 2022. Do you feel that the valuation
I wouldn't use as strong a word as you mentioned as unjustified. But I think given the growth that we are projecting for commerce at about 30-35%, the current entire market cap of Veranda Learning, including the commerce business, one has to see. But from initial conversations I have had with very seasoned and institutional investing to. But it's, the market have their own ways of behaving. But given just the profitability and the growth, I think it should be a strong.
When there are almost 50% of your revenue coming from the commerce vertical and then academic, vocational, all other contribute the rest 50. So almost 200-220 crores comes from the commerce vertical. That you're expecting to go to 1,000 crores. You also, within the vocational business, has seen strong growth, but the EBITDA profile isn't quite visible there yet. What do you expect the revenue targets for that business, for all those other non-commerce business?
By 27, we expect the non-commerce business, which is essentially our K-12 managed school business and the government test prep business, to contribute possibly about drivers that we are very focused on at this stage is the occasional business that was one of the verticals of Veranda. We have put it together along with SNVA to form a Veranda. By the promoters of SNVA, Vivek and Alok Singh. And one of the things that it does is it's a global university model with multiple universities in multiple geographies, with multiple faculty. At a significant growth path. Currently, that stock is held as a treasury stock in the non-commerce Veranda business, and that is expected to grow actively being discussed and closed. So we will talk about it over the next 6-8 months when they actually happen. So the non-commerce business as a K-12 and a government test prep.
Right. Got it. But Mr. Kalpathy, you are giving projections for a business that's growing very well and the expectation of growth is very sharp. But for the other business that's already in the listed entity, the government side, the vocational side, I get about that revenue should double for both of them from the current 100 crores that we are seeing by FY30. Should that be the base minimum expectations that investors can have?
So the business, I think over FY27, 28, sort of to look at an FY30 yardstick, we would at least expect this business to grow by about 150 to 100.
In terms of growth projections, because you've done almost 14 acquisitions, J.K. Shah, of course, being one of the bigger ones, but in the commerce vertical also, you've had other acquisitions in this time. Do you feel that's a strategy that you're Opportunity now doesn't allow so much competition because we've seen a consolidation in this space also, right? And recently that big acquisition in the private space of Unacademy shows the significance and the tough current businesses will have to grow and show those projections?
I think the acquisitions that have been done predominantly has been to create these 4 verticals which we have done. At any more acquisitions, we got everything that we need to organically grow. We have created enough moat in terms of competing advantages in all of these verticals. So not are we looking at taking on any further debt for scaling our business given our strong internal cash flows. So the first 3 years of Veranda was acquiring, consolidating, and now the next couple of years will be to unlock value for all the shareholders who've been with us for the last 3 years.
Got it. And that's a big statement coming in, Mr. Kalpathy, that you do recognize that there has been a confirmation of debt being manageable and equity raise also being limited to what has been. So got that point. The other aspect has been the enrollments. That's been very positive, especially since FY24, the 20 to the commerce vertical. Would that be a statement that would be right to make?
Commerce has definitely been on a very strong growth trajectory, both in terms of registration. We put out that our government test prep business, which is spearheaded by Veranda Race as a brand, went doubling its revenue in the last 3 years. When we came 100 crores. So even the non-commerce businesses are now on a strong trajectory of revenue and enrollment growth, largely because we have been through a path of acquiring and then setting up an integration pathway. Having all of that completed in the last 1 to 2 years, they've been on an organic growth. And that's where you are really seeing the results coming. The integration.
Mr. Kalpathy, thanks so much for firstly joining in, because I know Q3 was a tough one for you. You are giving in some major projections for the next few years, but a key meeting happening on 24th April will touch. Thanks so much for joining and giving us time here at NDTV Profit.
Thank you so much.
Well, that was Veranda Learning, a very, very interesting opportunity right now for a space that's been hot in terms of consolidation. Soon in FY27 will be something to watch out for, but that's all the time we have on KYC. Thanks so much for watching. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया
बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा।
गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps
talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है। और
this market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would ask,
IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी. Actually, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the this is a wedding dress which was not delivered.
Leaves and lotus bloom. Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this moves towards net zero. Every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's sustainable
Phase of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition from surgical iron.
Of US-Iran peace deal continues to loom over the Indian markets. Nifty slumps over 1.5%, while Sensex slips over 1,200 points, all sectors in the red, barring Nifty IT and pharma. PSU banks and media cracked the most, down over 3%. The rupee continues to fall, slips past a fresh psychological mark, hitting 94 against the US dollar for the first time. The move underscores sustained pressure from global dollar strength and risk-off sentiment, keeping currency markets on edge. The government has revised its fuel duty structure, cutting the special additional excise duty on petrol to rupee 3 per litre and scrapping it entirely on diesel as Middle East war concerns continue to rock oil prices. Tata Motors passenger vehicles under pressure today after Jaguar and Land Rover The shutdown is due to a part supply issue impacting production of key models at the facility. While the halt is expected to be temporary, the development has raised concerns around near-term production visibility and earnings impact. Brigade Enterprises, that jumps nearly 10% today after the company announces 2 new residential projects in Bengaluru, amounting to over 1,800 crore rupees in potential revenue. The surge stands out amid a broader market decline, highlighting investor optimism around the company's strong execution and entry into high-potential premium housing corridors. Hello and welcome. You tuned into Markets at 12. I'm Nisha Poddar and let's take it straight to the markets. And yes, all's not good, or should I say oil's not good? Because for the Indian markets, it's the crude which is really playing truant as the single biggest impact really coming in when it comes to the crude oil prices. And because of the flip-flop in terms of the US-Iran negotiations and de-escalation of the Middle East war, crude prices remain elevated, and therefore the Indian market is also seeing that kind of a pressure really building because of the crude oil prices. Also remember, rupee is hitting a newer low for the past many days. In fact, a little bit of recovery in the last trading session has also been taken in, and 94 past has been the kind of rate that rupee has got against the dollar. So it's coming in as a worry. All sectoral indices are in the red at the moment, barring a few with minor gains. Let's focus on one particular counter because of the news developments we are tracking here. Biocon, which has announced a top management reshuffle with changes at both the CEO and CFO levels. Siddharth Mittal has resigned as the CEO and MD and will move on to a new role within the group. Varsha is here with all the details of the top brass changes at Biocon. Varsha, tell us.
Well, yes. So if you see Siddharth Mittal, who is the CEO and Managing Director at Biocon, has resigned, but he'll be with the Biocon and will, have some other leadership role, which is undefined as of now. And also one important thing is Shrihas Pradeep Tambe, who is the has been appointed as the additional director of the company, and currently, if you see, he is the Chief Executive Officer and Managing Director of the subsidiary company that is Biocon Biologics, and he has been appointed, or rather for 5 years, effective from 1st April 2026, subject to the approved, of the shareholders of the company. So this is in all a positive news, considering that Shrihas Tambe is the, backbone when it comes to Biocon Biologics, and will also shape the future of Biocon overall, considering the company going into biosimilars, which is the next leg of growth for the company. So overall, if you see, Biocon will be defined as a biosimilar company, and Shrihas Tambe is the main guy behind that.
All right, Varsha, thank you so much for getting us those important details coming in on the top management changes at Biocon, and that particular stock is down close to 2% in trade. Let's take it straight across to the market, and how should one trade in a highly volatile and today a weak market. Nishal Maheshwari, market expert, joins in now. Nishal, it's one day up, one day down. It's volatility, I would say, instead of relief that came in for 2 days in the middle.
Yes, I think it's a global situation basically, which is also up and down every day, and that's why I think it's getting reflected in the market.
That's right, Nishal. Yes, but how does one really a one-sided affair from the US, because Iran has rejected their last proposal. So how should one really take cognizance of the kind of uncertainty that's there in the market, and what happens to the ones who bought in hordes, considering there was a relief in the last trading session and now the markets are down again?
So I think it's a volatile market. If you are a long-term investor, then maybe the valuations are interesting at these levels. And every down price from here, basically one can keep on accumulating in smaller batches. But if you are a trader, I think this is the best market to be avoided. There is no point on doing unless you are a short term, you are on the short side. Then one can continue to keep on shorting this market because there is too much uncertainty. But I think the best thing is to avoid the market for the moment.
All right, so you're saying avoid the market for the moment, but what all factors are getting baked in or already baked in into this market, Nishal? And are we prepared for a much worse condition? And second, also how now RBI will take this particular situation where inflation is going up really on the ground level because of the various energy supplies being constrained?
So I think as far as inflation is concerned, I see the number maybe going up to 4.5%. I think which is okay basically given the current situation. I'm talking about at the current market price of oil until it takes off big time. Then we have to take a relook at it. At the moment, I don't believe that RBI is going to be looking at any rate hikes for the moment, given the inflation is sort of okay basically on a long-term trajectory of 4%. I think that's where I think maybe it will go up 4.5% is what most of the economists are projecting. So that is as far as inflation is concerned.
Right. So, Nishal, there is one more aspect, which is that a lot of global brokerages have really downgraded India's expectation and potential for growth, backed by the kind of uncertainty that's taking place, and also that India is the worst affected market when it comes to the oil supplies, when it comes to the Strait of Hormuz being constrained. Now, how does one read into it, and how worried should the investors be of this kind of downgrades really coming in and lowering the earnings potential as well as the overall outlook?
So I think market is always ahead, and market has gone ahead and already discounted quite a bit of that, basically that the GDP is going to get downgraded. I think the worst I saw was from Goldman Sachs, which came with around 5.9% downgrading from 7.5%. So already I think 150, 160 basis points they have shaved off. That is the worst kind of a situation, worst case. But I think 60 to 80 basis point is most of the other economists are putting out. So maybe from a 7.5, you may go down to 6.7, 6.8. But that's also a pretty decent number, basically, given this kind of volatility in the world. Now, in this background, we have to see that market is already down or almost 10% from the top. So I think quite a bit of it is baked in. At the moment, I see that the market is now talking about maybe 5-6% kind of earnings growth down from 15-16. That is what the market is baking in for FY27. And I think that's a fair number, basically. That's why I was saying if you are a long-term investor, it could be a good time to actually start accumulating from the market.
Yes, but Nishal, also the question is for how long and how much cash should you put in right now? What if this particular situation really persists for longer than we really expected? So that is one question. And how much more downside on Nifty 50 are you penciling in, considering that the de-escalation doesn't happen in the given 10 days?
So nobody knows whether it's going to happen in the 10 days, 20 days. So it's a difficult call one has to make, basically. So if you are a long-term investor, you are saying invest for next 6 months, 1 year. And I'm very sure basically this cannot last for that long. So that is a time frame basically which I'm talking about. Basically, if you are an investor for more than 6 months a year, that's a long-term investing, and that's where you should be. And from here onwards, maybe there is another 5% downside in the market, maybe 7%. But I think 20,000 Nifty is a very, very strong. Any way we calculate it, I think it's after even taking consideration saying that India is going to get even diluted as far as PE is concerned. In that scenario also, I don't think so. every fall of maybe 200, 300 points, one can keep on accumulating. So maybe one can form batches of 15% each. If one has to spend 100 rupees, every 15 rupees one can do with the 250, 300 point fall from here.
All right. That's a good suggestion, Nishal. So thanks so much for joining us with your insights on the market, and also a strategic suggestion for the investors to really put in money in a very uncertain time. All right, let's focus on one IT bellwether. We are talking about Infosys, which has announced 2 acquisitions worth about $500 million. And those 2 are Optimum Healthcare for $465 million, or over 4,300 odd crore rupees, and Stratus Global for about 890 odd crore rupees. But the stock is slightly depressed, but it's an otherwise very weak market as well. Amit Khanna, who's a partner of digital and AI at Grant Thornton Bharat, joins in now to discuss what it really brings to the table for Infosys. Amit, with these 2 acquisitions, you have a good view on what these companies really bring to the table. How do you see this acquisition and the benefits for Infosys?
Yeah, thank you, and good afternoon, everyone. I think these acquisitions are going to give Infosys a positioning from a mid-tier IT services company to end-to-end digital transformation player, particularly in the healthcare area. The market is moving for more verticalized sector-specific solutions. Optimum is very, very strong in that space. It is very strong in the provider area, which is where the gap exists for Infosys. And this will give a lot of solutions in the portfolio of Infosys, where Infosys can do end-to-end from a mid-tier to a large value-accredited solutions, particularly in US market, which is perhaps the largest for healthcare.
Right.
From the insurance one, I think the same analogy, though I will say the Optimum is more strategic acquisition in my mind compared to Stratus.
That's right, and it's also quite a large amount as well, $465 million that have been spent. So Amit, what does the Optimum Healthcare IT really bring to the table? And when we talk about the AI thrust amongst the big tech companies, how does Infosys now position with these acquisitions?
Yeah, so let's talk about Optimum for a second. So Optimum is very, very strong player when it comes to provider market in the healthcare space. It's been doing the digital transformation in that space very well. Ideally speaking, the healthcare is one of the sector which is very specialized in the nature. So if you see the large player, they have very strong vertical presence in the sector, not the horizontal presence. So look at Accenture Health or a Cognizant, who are big in the healthcare space. They are very, very verticalized when it comes to the healthcare. Also, the client tend to buy end-to-end at one go. So they don't go to IT service provider for providing a small horizontal layer of IT services. So in that sense, this will give a very good strength to Infosys to actually pitch for those kind of a player. And it will be an emerging consulting against their players. I think one, they can pitch for the larger margin game. They can play the whole AI game very well because the Optimum positioning is AI-driven digital transformation rather than the classical way of in the digital transformation. So that will also help Infosys to up the game in that market.
Right. So, Amit, when we talk about the similar capabilities being there for other competing companies in the IT sector in India, who would rank first? And with this particular acquisition, how does Infosys really figure on?
But I will say that Accenture, Cognizant, they are way ahead if I look at the larger player. But also there are large specialized players in this market who are doing very, very well, including players like the Optums, the Philips Healthcare, the specialized players like IQVIAs of the world and all. They're all doing fairly well. Now, Infosys, I don't think anything will change overnight, but now it has large onshore capability to support does not have a very large delivery setup in India. So Infosys also has a way to leverage the complementing skill, because Infosys is strong in doing large scale. Now it's got a very large front-ending team there, which is a consulting team, and also a very large tech capability sitting in India. So together they can make a lot out of it, and the time will tell what they make out of it.
That's right. But Amit, a lot of action is really taking place in the AI capabilities of the Indian IT companies, or at least the top 5 ones, and the mid caps like Coforge are also taking a stride. What are the trends really picking up when it comes to what is being seen in the market, where there is a divided house in terms of those who really believe in the IT companies and the ones who think that it will perish?
Still do a lot of commoditized work. Now that part of the work will be taken over by AI very soon. It does not mean the number of people required to work will reduce drastically, but the nature of work will change drastically. So they generally need to move closer to the client, closer to the solution, and application of AI to bring in the value to the client. I think, and all of them, all the top 5 players and some of the small players are trying to move to that direction as much as they can over the last few years. I think the trend will continue. To do this successfully will actually succeed. I genuinely feel that India will give few more large IT players over the next few years, purely because of this displacement and opportunity.
Become bigger as well, besides the pivot of the already existing IT companies. Thank you so much for joining us with your insights on the AI thrust of the IT companies, and especially what joining us.
Thank you.
All right, next we will chat about something which has really been the hot topic of discussion, especially with the IPL's season really starting in April, and ahead of that, 2 big bang acquisitions, 2 teams getting sold at over $1.5 billion. We are talking about RR and RCB. There have been a lot of talk about the steep valuations and also the earning potential of the IPL teams, and also how does IPL really now look as an these questions and analysis to Jayavardhan, who's the co-founder and CEO of Ntracker. He's joining us right now live. Jay, always a pleasure speaking to you on for majority of the IPL teams on a YOY basis when we compare 2024 and 2025. Your analysis on that, and what are the factors
and profit both have declined for most of the IPL teams in the last fiscal year, that is FY25, and the major reason is a decline in central broadcasting rights. And rest of the income comes from sponsorship, merchandise, and ticketing business. So clearly stress at the profit is being second, what's driving the valuation of the 2 IPL teams which got sold out recently, RCB and Rajasthan Royal. So the first reason is rare opportunity to buy a team, and the brand value attached to IPL. I think that's the reason for driving the valuation. It's intangible, but I think to the room where you can sit with the businessman and tycoons and conglomerates. So I think the excess is the major reason behind driving the
kind of valuations that have been really commanded by the two two teams, RR as well as RCB, are in line with the consumption companies, deal valuations. They are akin to that. So, and also Aryaman has made a statement, Aryaman Birla has made a statement recently saying that IPL is quasi-consumption. How do you assess this particular aspect?
So, of course, apart from the brand value and brand affiliation, there is future opportunities in sponsorships and merchandise business. So if you look at RCB balance sheet, apart from central broadcasting, IPL valuation are rising because of three things, guaranteed central revenues, scarcity of teams, and massive brand monetization potential. But 25x revenue multiple, this is clearly a long-term strategic bet. It looks irrational to us, but I think in a long term, we have seen Vijay Mallya, tweeting and over the next 10 years, this is going to rise multifold.
Right. What are the reasons for this to rise multifold, and what are the monetization aspects very quickly?
So that is the major driver. Apart from that, all these teams are also playing different sort of leagues globally. So if you look at Kolkata, the clear headwinds there, and the sponsorship deals are also going to be fat and big in the coming time. Although the central broadcasting
speak to you, and many aspects covered there. The profits have reduced on a year-on-year basis, and these valuations have been steep, but it's also the scarcity premium that is really driving it. And as a franchise. Thank you so much, Jayavardhan, for joining in with all the details and your insights on that. All right, let's take a quick look at the market at this particular point, and no let-up. Nifty 50, keep an eye out on the market. There is no relief coming in, and the weakness really persists. With that, it's a wrap on markets at 12, but keep it with NDTV Profit.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy.
IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But one term sheet.
What happens with a business when it has also a significant retail customer focus?
Emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
The places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
The Tamil Nadu twist. Join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
Share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us. A sustainability mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit. NDTV DP World PGTI Golf Pro app, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mind.
Tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru?
Of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This.
I'm fully convinced on the stock. With a table thumping buy.
Stocks with me, Hiral Datia, and today we have Alex Matthews standing at the NDTV Profit Market Pit with all the action. Alex, lots happening in terms of markets, and welcome to Trending Stocks as well today. What are you picking?
Show. I've been looking from the sidelines and today I get to participate, but it's not a pretty picture. Of course, we're off the low point of the day, but we're very close, about 1.5% off, and there are a few factors. Saw that in the overnight handover from the US. This is something that is playing out in India and across the board in the Asia Pacific region as well, and I wouldn't be surprised to see the European markets move in the same to the day, close to 400 points in fact at this juncture, 359, 360 or thereabouts, but it has reached that 400 point mark earlier on in the session. India VIX, this is very crucial, has spiked the recent past. You have a situation where the broader markets are underperforming or have come off even in the span of the last 5 to 7 minutes or so, down about 1.8% or thereabouts. So the breath is not very pretty at this moment. And you're also seeing uncertainty that persists globally. Because in these so-called negotiations that are taking place, and Iran has responded with its own set of demands, 5 of them, and there is no seemingly end to the conflict at this point. And so of sentiment that is currently playing out. And finally, and most importantly in today's context, is the fact that the India rupee has crashed quite significantly. It hit a low of 94.65 on in the what the Reserve Bank of India's response in this context is going to be. We've already seen the big story of the day, Hiral, which has to do with the excise duty cut on both petrol and diesel, at least to a certain extent.
That's the key from here on, and how they manage this dilemma is the key question, and that's going to be a focus point at our 1 p.m. special today as well. But let's quickly look at the watch list. ONGC, the gains of crude. And that's the reason why the pressure continues. However, a relief coming in the form of excise duty cut. Infosys has acquired 2 US companies, and that's the reason why we're talking about it, along with Tata Speed. Gaining streak. In fact, what has happened is CLSA has removed HDFC Bank from their portfolio and replaced it by HSBC. HEG Graphite India, both of these counters are buzzing in trade because graphite. The Bangalore residential project launch, which has a GDV of around 700 crores, is what is keeping Brigade Enterprises in focus and up in trade. And you have a OFSS, that's Oracle Financial, on the back mega. So some bit of profit booking coming in on that counter. And Sagility, a lot of brokerages which are turning positive, and they've reiterated their midterm growth targets. So all of this and more on trending stocks today. But let me go back.
Rolling. Akshay Bhagwat joining us. Good afternoon, Akshay, and thanks so much for taking the time. Let's start things off rapid fire. And let me first ask you about HDFC Bank. We've seen it plumb low.
For HDFC Bank, 780 is the resistance, and possibly 720 is where the short-term downside is possibly opening up for HDFC Bank.
Okay, what about HEG and Graphite? Because these are reacting to news-based.
600 can be the possible target for HEG, and for Graphite India, the upside can be till 690 to 700.
Another stock in the news, Acme Solar. You heard about the commissioning of that facility.
Can be the possible upside.
Brigade Enterprise from the real estate pack did particularly well in the early part of the session, but cooled off a tad bit. Can it still be bought for the potential upside from this? Financial Services was one of the top gainers, but then again it's cooled off from the high point of the day. Would you buy at this point?
Avoid strong resistance at 7,000. Better to avoid. Give it a miss.
Give it a miss. So most of the stocks here are a miss because you're not certain about the volatility for the market as a whole, and certainly not for these individual names.
Absolutely. It's in fact some of the stocks which are trending on Google are very interesting to see. From a Bajaj Housing to a BEL, ITC, RVNL and Tata Steel are the ones that, you know, are trending on Google. Let's pick up a Bajaj Housing first.
Still it's negative, it's an avoid. Possibly 70 is the downside I foresee in Bajaj Housing for short term.
Okay, what about BEL, ITC, RVNL or Tata Steel? Anything that you like from these names?
ITC capped 290 to 85 is a strong support, and if market supports a rebound, can see 315 to 320 in the making. Tata Steel is another buy candidate from a short-term trading perspective.
Right. All right. So interesting names. But one of the stocks that stands out after an analyst meet that was done a short while back is Sagility. And you that there is potential for strong EPS growth, close to 20% actually, I read in some brokerage notes. But let's find out what exactly the takeaways are from the various brokerage notes that have come through, and quite positive. The week actually, because of the way that it moved on Wednesday. Why is it still in focus today?
Well, Alex, thank you for that. If you look at Sagility as a company, it was in focus after Nomura's note, where it saw a spark of 7 up by 2. Guidance for low double-digit to mid-teens going ahead. Further, they also see the overall shift coming in from the employee-based model and moving into project-based model, where they see that employee-based earning will be lesser and company will move into the project-based model, where they'll start earning based on the projects they do than the fixed-price projects. Secondly, they also restates that going ahead, the AI will play a very structural role for the management, and they also want to increase their stakes when it comes to provider segment. And given that the overall US pressure that which they're facing in the insurance company, that would act as a tailwind for the company going ahead, and that would help the company grow further, and that's the reason the stock is buzzing in today and remains the focus.
Yeah, absolutely. So it's up. Chokalingam joining us right now. Mr. Chokalingam, as always, a pleasure speaking with you. Let me start with a question on Sagility and whether or not you think that there is significant potential upside. There are brokerages.
Good analyst rate. Whether you take a year-on-year basis for quarterly result or annual result, the growth seems to be quite impressive. Stock also corrected and PE also corrected.
So that's the view on Sagility. Let's talk about the graphite electrode pair, which is HEG and graphite. Now, in of steel, they're used specifically in electric arc furnaces, but they're also quite a bit dependent on what plays out around the globe, particularly in China and in the US. So let's go sharply today. Parth.
Thanks a lot, Alex. So, with the weaker markets today, we have two companies standing out, which he rightly mentioned are HEG and graphite. And the reason why these two are up today was the by around 600 to 1200 per metric ton, and this translates to a rise of around 15 to 30% from the recent levels. So now this gives our domestic players a good enough pricing power. EBITDA as well, so that is something that we need to track moving forward. And the reason why the industry leader has increased their prices is because the raw material and the soaring crude prices.
Yeah, absolutely. So quite a few supply chains around the world are getting impacted. You heard just a short while back how the lack of helium supply is affecting chip manufacturing. On graphite electrodes and HEG and graphite. Mr. Chokalingam, I don't know what you think about the fundamentals, because they're yet to actually announce that they too have taken price increase.
Not chase after this rise, because user industry is steel industry, and because of this war, already this morning, if you see, the global institutions have revised downward I would, unless it corrects 5-10%, I would not buy them at these levels.
So that's with regards to where graphite companies go. But moving on, one is given out. Now, to be noted that this is not something that will be passed on to the consumers. This does come in as a benefit to your OMCs because of the rising prices. The other way to look at consumers facing a price hike, here they will be at a status quo. But this does become an issue when it comes to the government's revenue stream. But let's listen in to what Finance Minister Nirmala Sitharaman.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज्यादा दाम में खरीदने वाली चीजों को सरकार उनको मदद करेगी, मगर जनता दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
To prevent the rise in inflation, and that's a very important talking point heading into the end of trade today as well. But one of the stocks that is bearing the brunt of selling, and this is again back has announced that one of their key plants, that is the plant in Solihull, is going to be shut for a period of at least 2 weeks. Let's find out from Puneet why this is significant. Puneet, for Tata Motors PV and JLR
downward spiral. Essentially, we started in last April of 2025 with the tariffs for Donald Trump, and then post that you've seen the cyber attack come on in the month of September. So you've already seen production next year as well, because you are seeing consistent pressure on production, as you rightly mentioned, in the plant in UK. Period of this is a pre-scheduled shutdown also for Easter holiday, so there's some bit of over in that. Out this information first, but the important part is that it's been one of the years where Tata Motors might find it difficult to even cross 3 lakh mark for JLR, which generally operates at 4 lakh in terms of sales performance. But now the CEO of the company, there seems to be a big challenge for the company going ahead.
Okay. Well, so that's the picture on Tata Motors. Mr. Chokalingam, specific question on Tata Motors PV is in India. Would you also have a similar opinion, and would you stay away from Tata Motors PV, or does it become attractive when it has fallen as much, and does this actually all
on this same channel? I've been consistently saying for the last 4 to 6 months that Tata Motor commercial vehicle business is far superior for 2 reasons. Tata Motor PV has and its investee company also a play on the global theme, whereas Tata Motor CV, the commercial vehicle is a play on domestic demand, and its investee company capital EV to Tata passenger vehicle.
With regards to where Tata Motors PV and CV goes, and Mr. Chokalingam gives his pick out of the two. Another stock that's buzzing in trade today is flat. Jasmeet is with us to tell us more as to what these acquisitions could mean for an Infosys and what brokerages make out of it as well. Jasmeet, over to you.
Well, Hiral, thank you for that. Infosys is on a speed to healthcare, special Optimum Healthcare, acquired for nearly 4,300 odd crores with a valuation of 1.7 times the price to sales, which seems reasonable. The second one is Stratus, which is in the insurance segment space, where it acquired this particular acquisition company extends their strong holding in the US in healthcare and insurance space, which they see growing, and they also wish to leverage the overall AI platform that's Topaz to increase their client traction going ahead. Going ahead. Well, we also have brokerage notes which have come up and given their opinions and what they feel of how much of growth will this acquisition add to the company going ahead. We have Morgan Stanley on the overall counter, which says they maintain equivalent target of 70 revenue going ahead. Further, we also have something like a Citi which says that they maintain neutral stance with the target price of 13.95, and they note that they see overall 1.6% of increase in Infosys revenue going ahead in FY27 with this particular these acquired entities to the Infosys going ahead. Secondly, they also make a note that the overall deal closure timeline is a very crucial thing to watch out for. While thirdly, they also state that with this, we can expect a lot of other IT companies to move ahead with more acquisitions.
Thank you so much for that. In fact, Mr. Chokalingam, a quick view when it comes to Infosys.
Certainly, it's a buy. I strongly believe 10 to 15% return possible for 4 reasons. Stock has its operations and also the rupee depreciation, which would be favorable to a company like Infosys.
That's with regards to where Infosys go. Moving on, you know, recent listing, which is Teneco, that had a conversation with Arvind Chandra, the whole-time director and CEO.
Every time there's technology, complexity and disruption involved, Teneco actually leads the way. And call it a marriage, a good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that to say, okay, most of the solutions that you have in the field are the conventional one tune kind of ride, which means you are never comfortable in any road. Yeah. Not in a regular road or an uneven road or a gives us the ability to take it to the next level where we have these hydraulic valves that interact with a shim stack, depending on the mechanical ingenuity, and we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. We are very finds a much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
Well, that's a very big point that you make, that it comes without the electronics part. Of course, a lot of processes that you are seeing around is regarding that product. So you are seeing that continuous demand being there as well. And as you rightly said, listed in November, had a bumper listing, bumper session as well. Manufacture the exhaust and then the suspensions which come in the ART system, as you mentioned.
Yeah.
In terms of your capacity, you are operating at a very high utilization. Do you that a lot more capex for both these are on the anvil now?
Absolutely. So right now we are in the Hosur plant near Bangalore. So this plant makes 7 million shocks a year, and we're running official announcements yet, but it's just a matter of time that that happens, because our order book, we said that in our Q3 as well, that our order book has been very strong. The 2028 revenues are already 100%. Announced a new plant for the clean air business, which is the exhaust systems in Kharkhoda in Haryana. But it's just a matter of time that we will be adding more capacity here as well, because the order book has been very solid. To 60% ROCE, that's what we reported at the end of FY25, because we got a very unique, standardized and modular approach to manufacturing, and you might have seen that over here, where we call it Lego brick. But we run that at very high capacity utilization. And because of that, we have this unique strategy that allows us to have high capital efficiency. And that's why the ROC is so high. And of course, as we move up the technology evolution curve, our margins will also improve.
So that's the management of Teneco. In fact, very quickly, any view, Mr. Chokalingam, when it comes to Teneco?
Hold in case it declines hard. Business looks too good. Return ratios are very good. I'm giving only hold because 25 revenue growth was not missing.
So that's with regards to where Teneco goes. But thank you so much, Mr. Chokalingam, for joining in. Always a pleasure to speak to you as well. But completely out of time, it's a wrap on this edition of Trend Talks.
That भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping.
Hello and welcome. You're watching NDTV Profit with me, Hira Dahadia, and my colleague Samit Sarkar. And this is a special conversation when it comes to the excise duty cut, the implications when it comes to OMCs, the implications when it comes to the government, the exchequer. And that's the big question from here on. Now, fuel prices are firmly back at the center of the policy debate, and in a decisive move, the government has cut the excise duty on petrol to ₹3 per litre and reduced diesel excise duty to nil, which is zero. While the stated objective is to temper inflation, the real question is transmission. Will the transmission translate into lower pump prices? No, the answer is no to this one. Or simply it is the ease of the balance sheet stress of oil marketing companies. That's what we're talking about, Samit, right?
Exactly. So there are two things that have happened. Firstly, they have reduced the excise duty that they used to charge, the government used to charge on petrol and diesel. And the second thing is they have made it sure that this will not be passed on to the consumers. So it's clearly a beneficial point coming in for the oil marketing companies who have been currently suffering a huge loss that we are seeing. And the Finance Minister Nirmala Sitharaman also said that the move aims to ensure uninterrupted fuel supply and protect consumers from global price shocks. Listen into what the Finance Minister had to add on this excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारे जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
So let's get into the details of this. Firstly, the government has cut excise duty on petrol to 3 rupees per litre from 13 rupees per litre. Now, do remember that there are 4 components when it comes to excise duty. There is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and then there is additional excise duty. Now, out of these 4 components, the component that has been cut is special additional excise duty. Here, petrol has come down to 3 rupees from 13 rupees and diesel has come down to 0 from 10 rupees earlier. So a 10 rupees reduction on both the retail fuels, that is petrol and diesel. And this brings down the total excise duty which the government charges on petrol from 21.9 rupees per litre to 11.9 rupees per litre, and on diesel from 17.8 rupees per litre to 7.8 rupees per litre. Now, as per Nomura, the blended marketing margin. So what does this do for the oil marketing companies? This lowers the marketing margin losses that the oil marketing companies have so far been incurring on sale of every litre of petrol and diesel. Now, as per Nomura, the blended marketing loss that oil marketing companies are were incurring was close to 48.8 rupees on sale of every litre of petrol and diesel, and this now comes down to 38.8 rupees given the fact that excise duty has been cut by a similar amount and this will not be passed on to consumers. Oil marketing companies will be keeping it to themselves to protect their balance sheet. Now, this will reduce the losses for the oil marketing companies, and change of every 1 rupee per litre on the margins increases the EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that even after this reduction in excise duty which benefits the oil marketing companies, all the 3 of them are still selling petrol and diesel at a loss. Now, what will be the impact of this on the government? Now, India consumes close to 170 billion litre of petrol and diesel on an annual basis. Now, this is as per analyst estimates, and this cut will translate into an annual loss for the government of close to 1.7 lakh crore rupees. Now, which is nearly 5% of the central government's gross revenue. So, a big hit coming in for the government if on an annual basis, if this excise duty cut continues to prevail throughout FY27. So that is one thing that we need to watch out for. And to discuss the same, let's get in Gaurav Gupta, Chief Economist of IDFC First Bank. So a loss of close to 1.7 lakh crore is what is expected. A loss of close to 1.7 lakh crore rupees is expected for the government. So ma'am, how do you expect the government to make up for the shortfall firstly?
So the net actual impact will be lower. It's around 950 billion rupees, which is around 0.2% of GDP. And that's because they have also increased the windfall tax on export of diesel as well as ATF. So on one hand, there will be extra revenue generation on the export of these 2 petroleum products, which will balance out the loss of revenue from the excise duty cut on petrol and diesel. So net for the government on a 12-month basis, the revenue loss will be actually lower, somewhere around 950 billion rupees. Our expectation is that given the extent, it's a much bigger cut. We were expecting a lesser cut than this, but it's a bigger, significant cut. It also shows that in the Government of India assessment, how serious this sort of West Asia crisis is and how they are looking at it. We assume that, it's not necessary that the excise duty cut will be there for the full 12-month period. It can also happen that if, let's say, the West Asia crisis de-escalates and the second half of the year, there's a sharp drop in crude oil prices, then it's more or let's say a half-year impact. Then instead of a 950 billion rupee revenue loss for the center, it can actually come down to around 440 billion rupees. If let's say you just take 6 months of these excise duty cuts on petrol and diesel.
Okay, but just wanted to check with you on this. Obviously, yes, the government has increased export tax on diesel and ATF, but what channel checks are now indicating is the fact that refiners have anyways stopped exporting most of the petroleum products. They are trying to store the same into the domestic market, given the fact that there is still uncertainty on crude availability that could happen going forward. So the impact, don't you think, could be on the higher side?
So if that's the case, then definitely the impact becomes the higher side. In our case, what we have done, we've taken, assuming for the 950 billion, if you take that estimate, that assumes that the quantity of diesel and ATF exports are at par with what we saw last year. And last year also was quite a weak year for both diesel exports as well as ATF because of the Russia-Ukraine and plus the sanctions on the Russian crude. So anyone using Russian crude to create refined products was also getting targeted. For example, we actually saw a sharp drop in Indian exports in FY26 of diesel as well as ATF. ATF, I think, was down by 21% in the year, and diesel also saw a significant decline. So taking the export pattern of FY26, that's how we're getting the net of impact. But yes, suppose if there is a standstill in our exports, which is still not the case, officially the government of India India remains one of the few countries which is not curtailing its exports of refined petroleum products. But if there is a slowdown and it stays for a large period of FY27, then the net cost impact will definitely go up. It can go easily above 1 trillion plus 1.5 trillion plus. But just to give you a sense of the revenue loss, if let's say the government had not increased ATF and diesel windfall gain tax, and you had only the duty cut, then the revenue loss is around 1.8 trillion for 12 months. So it can't be higher than that. So at max, let's say if our exports get impaired, it will be around 1.3, around that margin. So not too much of a risk to our 950 billion estimate.
Gaura, good afternoon. This is Hiral here. You're talking about the export side of it. Now, there are reports suggesting in terms of brokerage notes where the government has increased the excise duty by 21%. And this is when it comes to domestically sold ATF, right? Is that something that you've taken into consideration as well? And if not, and if you have to, does anything change?
We have taken into account the windfall tax that they have done for exports as per the notification that we saw from the gazetted notification. So that, as per our interpretation, was limited on export side, not for the domestic consumer. As per our understanding, there is no hike for the domestic consumption of these ATFs, because that will be counterproductive from the government. Is what they're trying to do is they're trying to protect the OMCs as well as the consumer. So our interpretation is that this windfall gain tax is on the export side.
Stay with us, Gaura. We have Mr. M.K. Surana, former CMD at HPCL as well. Mr. Surana, pleasure to speak to you as well. I know we've been talking about this in terms of the excise duty cut that has come in. Let's break this up into two parts. First up, in terms of the impact when it comes to oil marketing companies. Yes, it will help reduce losses on sale of petrol and diesel. And this is if benefits are not passed on to the consumers. And that's where we're sitting on right now. Your back of the envelope calculation, how are you looking at this to benefit, OMCs, and to what extent?
Good afternoon to you and to Gaura. What the excise duty reduction is there, to my understanding, it is not to be passed on to the consumers. And it will reduce the losses which the oil companies are bearing or the under recoveries which the oil companies are having because of increase in the crude prices in the current situation. There is one more angle, that because it is a high volume business and there is a lot of liquidity required on the part of OMCs also. So to reduce the burden of the excise helps in reducing the liquidity. Otherwise, you can't be buying crude at a higher price and selling the product at a lesser price with such a high volume, which may lead to the liquidity problem otherwise. So as far as the exact quantum is concerned, I would not like to guess right now because it will differ from companies to companies depending on what is their share of marketing and the refinery volumes and how much they are buying from outside, and also at what price they have tied up the crude, because that item is slightly sensitive in the current situation, that who is buying from whom at what price. So I would like to comment on the exact quantum, but definitely it will help in reducing the losses which are under recoveries which they are having.
Right. Just as per your understanding and analysis, at this point of time, what we are hearing from our channel checks is that though government has increased the export tax on ATF and diesel, but at this moment refineries are anyways refraining from exporting these products. So this move will technically not benefit the government much, right?
No, basically the purpose of putting the export duty is to ensure that some of the people do not export because the international prices are high at the cost of the domestic consumption where the prices are a bit curtailed or static.
Right.
And otherwise what will happen is that the private players will be exporting and making the profit, and all those volume will shift to the public sector oil companies and their losses will increase. So it is a sort of balancing act which the government has done, wherein there is a discouragement to export, and at the same time there is a reduction in the excise duty on so that the oil marketing companies at least have a lesser burden than what it is supposed to be. At the same time, the consumers are not required to bear the burden of the higher prices, which will have the macroeconomic impact in terms of inflation, etc. So the similar thing has been adopted earlier also, where the government has tried to manage the increase and decrease in the crude prices by varying the taxation without impacting the market price.
Right. Yes, sir. The oil marketing company, in fact, the PSU OMCs are not taking any price hikes to offset the impact. But private players, on the other hand, have already taken a price hike. Naira, for example, has increased, I believe, diesel prices by around 5.3 rupees and petrol prices by 5.3 rupees and diesel prices by 3 rupees per litre. So do you think this will lead to a market share shift towards oil marketing companies, and that could also at this point of time be negative for them given the fact that they're already incurring losses on sale of every liter of petrol and diesel?
Recoveries will be more than this 5 rupees and 3 rupees currently, and therefore the volume is already shifting to the public sector OMCs who have not increased the price. Rather, there would have been the private players would have been discouraging the sale currently, as has been done in the past. So one of the reasons why you see some of the crowd at some of the OMC petrol pumps is because of those volume shifting from private sector to the public sector companies.
Mr. Surana, we're talking about under recoveries. As Somit mentioned, a very conservative number, but a couple of brokerage notes are of the opinion that they're somewhere in that range of, say, 30, 35. That is the kind of number that we're picking up from a brokerage note. And post all of this, expectation is it could actually come down to, what, 40. How do you read this kind of a print coming in from a brokerage note like a Nomura?
So I would not like to comment on that. I will leave it to the analyst and the people who comment on the stock market to guess on that. But only thing I can say is that it is not as straight as the people understand, because they must be doing the daily crude price and daily product prices. But actually the time when you buy the crude process, it comes to the market, there is a time lag. That's number one. Second, the companies follow different strategies to price the crude when they make their contracts. And therefore, rather than a straight way trying to jump to a conclusion, I would probably refrain from commenting on it right now. And especially not so close to the year end.
Okay, stay with us, Mr. Surana. Gaura, let me come to you. You know, we've spoken about the quantum of pressure that it could put on the exchequer. Now, the question is the fiscal deficit pressure that comes in the form of the revenue lost to the government right now, one. And the other side of the story over here is, if they wouldn't have done something like this, they would have to let the OMCs pass on the price hikes that were happening, and in turn leading to higher inflation, which then would trickle down again to the government's borrowing program. if you have to look at both sides, do you think this is a better option that the government has selected, number one? And two, what is that trickling effect that you're expecting to see now?
It's a very good question, actually. I think the government's intentions are quite noble. It's a much bigger cut than we had penciled in. So they are trying their best to fully protect the consumers. So what had happened during the Russia-Ukraine period, where we had almost more than 100 days of crude above $100 per barrel, is that there was a burden sharing model. The government of India cut excise duty by, let's say, around 8 rupees per litre and 6 rupees per litre on petrol and diesel. There was also a 3% increase in retail fuel prices for the consumer. OMCs also absorbed some part of the, let's say, the LPG side of the shock in terms of under recoveries. Now, this is a much larger cut. So I would say the insulation to the consumer is more, but I don't think the government will benefit from the perspective of fiscal, which you mentioned in terms of the borrowing yields. There also the cost will have to be paid. So after penciling in this sort of cut, and our estimate is, let's say this is only for 6 months. And then there are other costs that the exchequer has. There will be fertilizer subsidy that will go up. During Russia-Ukraine, your fertilizer subsidy bill went up to 1% of GDP from a budgeted of 0.4%. Currently, again, it's 0.4%, which is budgeted. Then you have LPG under recoveries. During Russia-Ukraine, the LPG under recoveries were around 220 billion rupees. This year, it could be much more. We have penciled in, let's say, around 330 billion rupees in terms of under recovery. So that will add to the LPG subsidy bill. Now, this cut, as you earlier mentioned, it does protect the OMCs to an extent, but not fully. If you look at the oil minister's tweet, where he has mentioned that the under recoveries or the losses that OMCs are facing on petrol and diesel, it's somewhere around 25 rupees to 30 rupees per litre. So this only takes some part of the pain away. There is still half of the pain that they are absorbing. Plus they have that pain on the LPG side. So it can affect the dividend revenue of the government of India that the government gets from oil PSUs. And oil PSUs account for around 33% share of the dividend income. So the hit to the fiscal will be there. Our calculation on a gross basis, just looking at the revenue foregone, extra subsidy expenditure, and we are working with, let's say, a 6 months sort of hit from our excise duty cut. It's still coming around 0.4%, 0.5% of GDP to around 0.7% of GDP in terms of extra cost to the exchequer. So it will add to the borrowing cost.
It will add to the cost. Let me just once come in here. Now, if you see the bond yields, on the back of this kind of announcement, we have seen that spike which has come in. Is that telling you that it is weakening of the fiscal discipline is what markets are reading into with the kind of spike that's coming in terms of bond yields as well?
Yes, I think the markets are the best barometer of risk assessment. So the fact that the 10-year yield zoned to 690, it shows that the market is also sensing that there is fiscal slippage risks. And this is not a minor crude oil shock. Many have called this a combination sort of shock where you have COVID-like features, where you have a supply side problem, which can be not just in energy products, but also in chemicals like sulfur, fertilizer, because we get 33% of fertilizer from GCC countries. So it has a combination of an oil shock and a supply side disruption. So in a way, it is much more negative than, let's say, the Russia-Ukraine crisis was. So the market is very accurately pricing the fiscal slippage risks. So even Russia-Ukraine, which was purely an oil shock, even there you saw the fiscal deficit, it actually was higher than what was the budget estimate. So the movements today have priced in the slippage risks.
Right. Surana sir, just wanted to get in one comment from you. Yes, government has done a very good move when it comes to reduction in excise duty, but this has also led to some fear or some doubt in the market when it comes to oil exploration companies, like for ONGC. Obviously, the fact is that post the Exploration Act that was passed, the government cannot come in and impose any windfall tax. But what is your understanding here? If you could just give your understanding to the viewers to our channel on this as well.
Just before coming to that, I just wanted to add one point to the earlier point, that compared to the Russia-Ukraine war in 22, this time the exchange rate is much higher than that time. And every rupee exchange rate change currently will make a difference of 55 paisa or so on the petrol or diesel prices. So that also need to be factored in. So coming back to your question on the upstream companies, see, the situation is unusual. So while the new oil exploration laws does provide some sort of protections to ensure that the investors remain attracted to the Indian exploration business and and with a lesser risk, but at the same time we need to see how it goes forward, because the situation is a developing situation and it is an unusual situation. So it depends on how the prices of the crude goes up and how long this goes, and what is the exchange rate trajectory it follows. But right now, currently, the understanding is there that probably the upstream companies may not be required to pay the windfall tax, but the government may have different ways to make the upstream company participate in this undertaking.
Okay, I think all of these are just questions which only the government can answer in the end. But thank you, Mr. Surana. Thank you, Gaura, so much for joining us on this special discussion. Gives a lot of clarity to the viewers as well in terms of what could be expected and the kind of impact that we could see from here on. But a welcome move, at least, for the OMCs by the government so far. Going ahead, what will the impact be is what we need to wait and watch and see till the time the West Asia crisis continue. But a thank you from Somit, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job. Got a couple of great jobs and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to compost putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple D.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
All right, we're talking about Biocon. When there is a change of guard, the top brass management changes. So Shrihas Tambe is going to be the new CEO and MD of Biocon, remember, from 1st of April. And also remember that he'll be the first MD and CEO of the integrated Biocon. So that's going to be a big one. We are joined by Shrihas Tambe now. Shrihas, many congratulations. And of course, this will be a Herculean task because this is a very important milestone in the company's journey on an integrated basis. What will be your focus areas in terms of integration and getting both the values of Biocon and Biocon Biologics?
First off, Michelle, thank you so much for having me on your show, and thank you for the kind words. It is, in that sense, the same companies. I begin my 30th year at the Biocon group this year, so I really don't see this as two different companies that are coming together. The DNA is pretty much the same. We share the same first name as well. We do have different businesses, and as your business strategy evolves, which I've seen happen at the company so many times over that I've been here now. One of the things that is important is that you align the talent pool that you have to reflect that change. And I think we've done that remarkably well when we did that integration of the acquired business from Beatrice. And I believe we're in a very good place as we've now completed the integration of the biosimilars, Biocon Biologics business with the generics business that we had. So we're looking forward to building a fully integrated global medicines company at Biocon now, which will now compete on science, scale, and access. So very exciting times ahead of us, Nishin.
So you have worked, Shrihas, for Biocon for the last 30 years in different roles, but you have been the MD and CEO of Biocon Biologics. So does that part of the overall integrated unit of Biocon now take precedence over the other businesses, and therefore your expertise is going to be valuable?
Well, I think more than precedence, it's important to see what are the different constructs that you will put together as you grow. One of the things that we're putting together is, while affordability and cost leadership is something that will underpin and is going to be important for us. We're looking to transition, and particularly as I build the company, I'm looking to transition this to a capability leadership organization. And that can come from any part of the organization. What I mean by that is that we want to compete on the basis of the science that we've got, the quality that we bring to our products, the speed that we bring for products from labs to market, and most importantly, the reach that we are able to provide given our global presence. So the challenge is right now to shift the lens from saying that we are not just a low-cost provider, but really a credible innovator and a very trusted healthcare brand globally. That is really the transformation that I'm looking to bring at Biocon, not necessarily biologics versus the generics. They're both part of the same company.
In the lines of bringing in the expertise, Shrihas, but I do understand the leadership changes and the vision towards that. Now, as the MD and CEO from 1st of April, what are your top priorities that we are going to see a change in the first quarter itself?
People have always been my top priority, and we've had exceptional talent at Biocon. Many of the people that we have, I've had the privilege of knowing personally, and I know that we've talent which is second to none. So that's something that remains my top priority, to make sure that we kit and skill the workforce that we've got to align with the evolving priorities of the business. That's so very critical as we set ourselves up for the future. Setting up technology platforms, because we've got several tools at our disposal, several pockets of excellence. One of the key priorities would be to set up platforms that we can deliver products from. Those will be in R&D, those platforms will be in supply chain, those platforms will be in our commercial excellence, where we can provide products through a variety of distribution channels and engagements with customers. So an approach to building and strengthening platforms to provide scale would be the next priority. The third thing, which is very important for us, is that we are leveraging AI, and I use AI not as artificial intelligence, but as augmented intelligence, because I believe that technology is not just essential, but is very likely that will be determinant of success going forward. So we're setting up an office of AI, and that is expected to give us the speed that we want and improve the quality of decision making going forward. And the last thing is that we will evolve our go-to-market strategy now that we are a much more stronger global one Biocon as we go forward, is because it allows us to bring products to customers, not just on the basis of our pricing power. That is something we've always had. But right now, the ability is to see how can we be able to partake in several other parts of that value chain. So moving that needle from saying that affordability and profitability are mutually exclusive, that's not the view that we hold. We believe affordability and profitability can coexist, and if you can support it with the right scale, with the right efficiency, and the right focus, then that's going to be the ambition at Biocon.
Right. There have been also, Shrihas, some recent developments of the benefits that Biocon will get because of Eli Lilly joining Novo Nordisk, and you also have approvals for biosimilar versions. Can you give us more insights on that?
I'm not sure about what you meant by I'll be joining Novo Nordisk, but there is certainly there are developments where insulin manufacturers in several parts of the world have made announcements that they will no longer be able to support the insulins products that they've got because of their increasing focus, we believe, and the demands that the GLP-1 products are seeing. Now, what it means for a company like ours, which is probably unique in that we have biosimilar insulins and the generic peptides in our portfolio, is it's a very large opportunity to serve so many more patients, particularly in Europe, which is where these announcements have come from, and to see that opportunity is to serve them in a very long-term, enduring manner, because these are chronic therapies. So, yes, very exciting times, and we're ready for that opportunity because we built scale, we made the investment, and we're ready for that, realizing that opportunity.
And GLP-1 opportunity also very quickly, Shrihas?
GLP-1 opportunity is something that we've been investing in for a very long time. Our genetics is focused on that. While we may not be in India in the first wave of products that have launched, we're watching this space very closely. And we have already launched the liraglutide generic in Europe. We've launched it in emerging markets, and we are seeing huge demand for it. We have approvals in the US. We will be looking to launch our liraglutide brand in the US very shortly. With the presence we have, we expect the uptake also to be quite favorable. So, watch that space.
Sure. Yeah. So Shrihas, before we wrap it, and I know you have limited time, just finally, how is the Middle East situation really impacting the business?
It's certainly unfortunate, and we hope it resolves itself soon, because it's not helping anybody at this point. While it may not have impacted operations directly today, it certainly increased the cost of imports in terms of the transit costs that we are seeing. It does increase the cost of procurement of petroleum products that we will be using. So there is the odd chance that you would have increased shipment costs in a particular time frame. From a business and demand perspective, that's been robust. We don't see a change, but you see these increased costs for a period of time from a logistics perspective.
Good afternoon. You're watching Small Cap Buzzers with me, Varsha, and my co-anchor, Somit Sarkar. Well, you listen to Biocon, wherein now Shreyas Tambe will be the CEO and Managing Director of Biocon. He is the man behind, the biosimilar business that Biocon has. But moving on, the other company which is in focus is TrueAlt Bioenergy. Well, the key triggers for this company is, of course, the core ethanol business, which provides a predictable growth. And also they are expanding into next-gen biofuels and green chemicals, which creates, a next leg of growth for the company. But to speak more about that and what lies ahead for the next 2 to 3 years, we are here joined by Mr. Vijay Nirani, who is Managing Director at TrueAlt Bioenergy. Well, Mr. Nirani, welcome at NDTV Profit. Always pleasure to have you. You're positioning biofuels as a energy independence platform. What is the single biggest growth lever over the next 5 years?
Thank you so much for having me. It's always a pleasure. So biofuels itself is a big carries a lot of potential for growth. We have now tapped only ethanol as our company and as our country is concerned. The next big growth levers will definitely be compressed biogas. We're looking at the gas shortages, which we had to be resilient and which we had to be ready by now already, but at least better late than never. So CBG is a big focus area for Government of India and for our company. We are doing close to 23 more CBG plants. We're setting up 23 more CBG plants in the days to come. And also aviation fuel is a big opportunity for us to decarbonize the aviation sector and be indigenous for our fuel requirements. So almost everything in this space is going to be a big growth lever since biofuels itself is very new.
Itself is very new and you're seeing a strong growth. What is the growth guidance that you are internally setting in for the company for the next 3 years, say from FY26 to FY28? What is the kind of growth that you are targeting for top line and bottom line?
So historically, we are a 3-year-old company. This FY26 would be our 4th financial year. And going by trends, we've been growing at almost about 50-55% growth rate. However, this year there has been the FY26 for us is going to be a year of change because we are transitioning 3 out of our 5 ethanol plants into dual feed capacities. So we had almost Q2 and little half of Q3 of this financial year was almost no production. So our growth rate is going to be much lower as compared to the last 3 years. But going forward, we carry the same focus of having the same growth rate as the last 3 years, right? So I wouldn't give a number to be precise, but our growth rate should be at historical levels.
Right. And what about margins, Mr. Nirani? Where they stand? You have a EBITDA margin of around 15 to 16%. For FY26 and going beyond, can we see an inch up in margin, or there will be pressure in margin as well for 26?
So it will be nominally better than what it was in the past. Practically because the price of raw material, that is maize and the damaged food grains that we consume to make ethanol, has drastically fallen down because of consumption or allocation of ethanol. Now, that is leading to us getting, last year the price of maize was somewhere about 24 rupees a kilo. To today, it is somewhere about 17 to 18 rupees a kilo. So that's a huge drop in the cost of raw material. However, we consume more of this maize in the Q2 and Q3 of during the ethanol supply year. So that is when we actually get to see a lot of improvement in EBITDA margins. But comparatively, we are looking at a nominally better margin as compared to last year.
And any capital expenditure plans that you have envisaged, and how are you going to fund the same?
Yes, sir. So we've got the compressed biogas plants. There are 2 JVs that we have formed. One is with GAIL Gas Authority of India. That is to do 6 CBG plants under phase 1, which are about to start ground now and should be commissioned by 3rd quarter of next financial year. So we're doing a capex of somewhere about 360 odd crores there. And there is another joint venture with Sumitomo Corporation that is to do 4 compressed biogas plants of 20 TPD each. And that's at a cost of about 320 odd crores. Net, there's a gross capex of somewhere about 680 to 700 crores that's being done. And it's with a blend of both debt and equity contributed by us and our JV partners.
Understood. And Mr. Nirani, you just said that FY26, you may see some pressure when it comes to the revenue. At least, I don't know the exact number, but at least can you see 25 to 30% of growth for FY26, or it will be below that?
So our expectation was to get to there, but considering the war situation in Iran, the consumption of petrol is being rationalized, and you've seen the prices of the product also going very high. So in the last 2 months, February and March, we've seen the consumption of ethanol to be a little lower. So the growth rate will not be double digits. So it will be in single digits as compared to last year.
Understood. So single digit of growth you're expecting when it comes to revenue. Got that too. Also, so what kind of asset turnover to expect from the 2,000 crore capex that you're doing in SAF project?
The asset turn would be somewhere about 1 times when we have the capacity fully operationalized, and we forecast about 2,200 crores on full use, or rather, let's say at 90% capacity use for a 300-day basis. And that is considering the cost of SAF to be at around 180 to 185 rupees a litre. So that's the target price that we carry, and that would give us an asset turn of almost 1 time. And let's say we've forecast an EBITDA of almost about 20-25% in that business there.
Well, thank you so much, Mr. Nirani, for joining and having a conversation with us, and all the best for the business.
Thank you, ma'am.
Well, with this was True Alt, company may see some pressure when it comes to the financial numbers or especially revenue in FY26, but is positive when it comes to FY27 and FY28. But moving on, let us invite our guest for the show, Astha Jain, who's Senior Research Analyst at Hem Securities. Astha, hello, and always pleasure to have you at NDTV Profit. Well, you heard True Alt management. What's your view when it comes to that counter? Because company is seeing some kind of pressure for FY26 revenue, but is bullish post that. So, any view on that?
Hi. Good afternoon to everyone. See, this company came out with its IPO in September 2025 and the issue price was at around 496. But we were not able to see any sort of up move in the issue price as well because it made the high of 530 and continuously falling from there. What I feel can be the possible reason was that, first of all, the valuation, because it came out with valuation of around 29 price to earning multiple. Now, looking after their Q3 of FY26 numbers as well, they have not shown any sort of big improvement in the profitability. In fact, there was a degrowth in the bottom line of the company in the Q3 FY26 as well. So that makes valuation more expensive. So my idea here is don't jump into this counter at this moment of a time. Let it settle down because it is already trading below its issue price. Let it settle down and then make any sort of entry into this counter, because now from the management view also we can see some sort of moderation in the bottom line in the coming time also. So it's better to wait and watch rather than making any entry on this counter. So we are recommending just to wait and watch, or if someone has this stock in their portfolio, maybe at the IPO time they may have taken the applied for the IPO as well, then they should have to wait at least for 6 months. So if anyone has got this in the allotment, then wait for another 6 months. Otherwise, there is no need to make any fresh entry. You may find it at more lower levels from here as well.
Focus towards F&O market. Let's get in Puneet to understand what's been buzzing there. Puneet, yet another day of fall that we are seeing on Friday this time around.
Well, consistent pressure this week, Somit, as you rightly highlighted, and even when you look at the stocks that are buzzing in trade today are also related to that. So while for the Sensex, it's bang on, consistent 27 stocks that are declining in trade today. You're seeing Reliance, Bajaj Finance, and Indigo continuing to be under pressure, while the auto pack, also led by Mahindra and Maruti, are also not doing so well today in trade. When you look at, of course, the Bankex also, that's been the other key factor. Consistent pressure there as well, failing to hold at that particular levels that we've been speaking about since the morning, both for Bankex as well as for the Bank Nifty too. So the private bank index yet to perform any moves, and stocks like HDFC Bank continue to languish. When you look at the stocks in the long build-up, essentially we've seen, Hutco as well as Godrej Properties continue to be so long build-up across on ONGC as well as LIC Housing. We're seeing short coverings on Oracle Financial as well as Samman Capital are the other couple of stocks. Long unwindings seeing on NBCC as well as PG Electroplast, and short build-up on stocks like Tata Motors PV, where you've seen that update coming in where a couple of weeks of production loss for JLR, while Sona BLW is also now on the list in that sense, where stocks broken yet again the psychological mark of 500 rupees, and 480 is where there is a medium or small term support, at least near term support for this. So these are some of the key stocks that you should have on your radar as part of our F&O setup.
Right. Thank you so much, Puneet, for all the details. Well, moving on, let's talk about a global biopharma engineering player, which is Fabtech Technologies. Let's see what that stock is doing. The stock is up almost 15% in trade. And if you see, the stock is buzzing on the back of volumes. But what are the key triggers? Let's go to Jasmeet and find out the details about that.
Well, Varsha, thank you for that. This is a recently listed company and the stock has been tanking since the time of its listing. We'll look at what the company does. Well, the company operates in global biopharma engineering space where they provide end-to-end turnkey solutions. While the company operates as a design-led infrastructure platform-based company where they take orders and fulfill it for their clients. We'll look at the key areas where they serve the pharma clients, biotech and healthcare companies across India and globally. Currently, the stock is buzzing on the back of volume which are nearly 21 times or 20-day average. While the company also has presence in Middle East, via the subsidiaries in UAE region. Now, if you look at the stock performance, the stock got listed at flat at its list issue price of 194 odd rupees, and since listing it's down 19 odd %. Over last 1 month, the stock has tanked nearly. Stock is up nearly 5 odd %, but YTD basis the stock is down 19 odd %. Now, in terms of the Q3 key takeaways, Q3 saw a weak quarter. It was a complete opposite turnaround quarter for the company on YY basis, where the company reported a loss of nearly 5 odd crore versus a profit of 23 odd crore in the previous year same quarter. If you look at what did not work for the company was the overall project execution lumpiness. The delay in that led to the overall flattish top line and impacted the profits as well. Now, in terms of the key financials, the revenue was down nearly 39 odd % in the Q3 FY26, while the company reported net loss of 5 odd crore. If you look at the outlook, the management remains pretty strong in terms of what they see the performance going ahead. They reiterate the FY26 guidance of revenue of 380 to 400 odd crores, while they also want the PAT to reach a 39 odd crores of profit going ahead, while currently it's at loss of 5 odd crore. Now, in terms of FY27 growth, the management targets a 30% YY growth in the coming year, while they also mentioned the PAT margin will be 9 to 11 odd %. All in all, we do see strong guidance, but the stock has been tanking in trade, but today buzzing on the back of heavy volumes.
Right. Thank you so much, Jasmeet, for all the details. Well, Astha, what's your view when it comes to FabTech Technologies? Clearly, FY27 company has given a good growth guidance of 30%, but considering the valuations, what would you advise to investors currently?
Surely, because IPO came in September again and it was at the issue price of 191. So at that time also valuation was a concern because it came at a price to earning multiple of 30x. And I think with the kind of financial performance this company has posted in their Q3 FY26 number, it is not that very much impressive. We have seen a downfall in the profitability, or yes, it is almost a loss which we have seen. So not a very impressive counter to bet upon at this point of a time. Maybe the news flow has make this stock outperform in today's trading session, but we still want to see more clarity on their profitability. Maybe the Q4 of FY26 number will make or will provide a clear picture. So rather than if anyone wants to take risk, then they can only make entry into this counter. Otherwise, I would recommend wait and watch if anyone don't want to take any sort of a risk, because even markets are not very in a very certain position right now.
Well, thank you, Asa. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, just before we end the show, let's get in Puneet to understand what's been buzzing with Likhita Infra. Why, Puneet, give us a go ahead.
Well, stocks, been up 23% in the last 5 days, but has been a lackluster counter since listing. Now, last 1 year, stocks are down 38% from the highs of almost 300 odd rupees. But even since the listing back in 2020, it's been an underperformer. Stocks trading at 170 now after today's move, but listed at just 120 rupees per share. So in that sense, has gone nowhere in the last 5 to 6 years. The company is engaged in laying off gas pipelines, as mentioned on your screen, and presence across the 20 states. So it has clients like IOC, GAIL, as well as BPCL. But within the segments, city gas distribution, cross-country pipeline projects are some of the key aspects that they look at. But overall, when you look at the current positions, there are two key aspects. A 925 crore order book where the market cap of the company is 688 crores. So you have to keep that in mind. And the other aspect that the 9-month FY26 financial picture has been quite weak. Revenue is down 10%, EBITDA is down 17%, and profit is down 32%. So post quarter 4, it will be a better aspect to look at the company in terms of financial as well as order book. But right now, stocks buzzing over the last 5 days on strong volumes at this point.
Thank you, Puneet. Thank you for that information coming in on Likhita Infra. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would ask call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में, he would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition. From surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders.
Welcome back. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and take all your stock-related queries. So if you haven't already, do start sending them on the WhatsApp number that'll flash on the top of your screen. You can also call us, speak to us directly on your stock-related query as well. The number for that is the landline number that's flashing on the top of your screen alongside the WhatsApp number. There you go. So please call us for solving your stock-related queries on a day that's been largely negative for the markets today. So let's look at the heat map for the Nifty 50, continuing to be under pressure as we speak, and down almost 400 points at this point of time. We broke in 23,000 mark yet again. So it's been consistent pressure on the markets. 42 stocks of the Nifty 50 down in the red, and stocks like Tata Motors PV that continue to be under pressure on the back of reports claiming 2 weeks of production lost yet again for Jaguar and Land Rover because of supplier issues in the UK is having a beating down impact on the stock. Reliance, Bajaj Finance as well as Shriram Finance yet again are down in trade today. Shriram Finance started to build some momentum with the up move on Tuesday, but all of that has fizzled out very, very quickly. In terms of the sectoral heat map though, you are seeing pressure across the board yet again. So the PSU banking index started the day with losses of almost 2 to 3% and has continued to do so. Nifty Realty, Nifty Auto, the Nifty Bank as well. All these indexes that have done very well in the past before the war broke out have seen reversals, money being taken off the table, and that trend has continued as well. The Nifty IT just barely by a slice of thread at this point of time in the green, but the move continues to be weak. In the advanced decline ratio, we had almost 2,150 stocks that were down in trade today at the morning in the morning edition of Ask Profit, and that trend has continued yet again. So just almost a 7:1 in favor of the declines for today. Mid cap, small cap also reflect that pressure that's visible on the benchmarks, as well as some indication that we've gotten from the advanced decline ratio. So down 1.6% for both these indexes. And individual movers finally of the BSE 500 show you that while some stocks have done well, like the graphite stocks, HEG as well as Graphite India, you're seeing an increase in global prices for electrodes and hence visibly positive impact for both these players. But Supreme Petro also up 6%, ONGC and Oracle Financial after a while is up as well, but largely stocks down in trade today. Godfrey Phillips, Minda Corp, Spark, Uflex are putting pressure on the index. But let me welcome in Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal Financial Services on the technical side, and Radha Raman Agarwal, he's the Managing Director and CEO of Swarm Advisors at this point of time as well. I hope I'm pronouncing the name of the company right, Radha, but thanks so much for joining me today. Let me go across, take the first stock-related query that viewers you've sent us today. It is on Coforge at this point of time. Our viewer Siju from Qatar, who is a regular viewer, he's holding shares at 999. So he's bought it post the fall or just before that up move started a couple of years ago. He's holding shares for a 3 to 5 year horizon, holding 75 shares. Radha Raman, would you suggest Siju to continue holding these shares at this point of time given the correction, or is selling out and waiting for more clarity post Q4 results as a strategy that you would suggest? I think you're on mute, Radha.
Yeah, it's on. I think you are able to hear me.
Yeah, I'm able to hear you now. Go ahead.
So basically, what suggestion would be more in terms of that we should be holding on the stock. There's already a correction which has happened, and I think IT is showing signs of giving a bounce back, and with the rupee thing as well. So I think it should be a good advice to hold on and then move ahead, and maybe wait for maybe additions into times to come, and see the results of the fourth quarter, and then basis that decide that. But the current holdings, one should hold on.
Got that view. But the next question that's coming in, it's from Sunil from Pune, who's also a regular viewer. He's holding shares of Vedanta. Now, Ruchit, he's holding shares bought at 655. We have the impending demerger in the near to medium term. What would you suggest him to do?
Broadly, what we have seen in last 1.5 months just seems to be a corrective phase within a broader uptrend. The major support for the stock is around 600 level if you look at some positional charts. So 600 to 620 is the range where I think the stock would find a good support. So on your existing positions, if you have some positional view, you can continue to hold on your positions and keep a stop loss below 600 on these long positions.
Got the view, Ruchit. But the next question that we're taking, viewers, you can also call us on the landline number on the top of the screen for stock-related queries as well, so that our guests can get first-hand of what your query is. It's coming from Mr. Ansari from Mumbai itself, and his question largely being a very, very long term. He wants to know, Radha, a couple of stocks that are on your radar that he can hold for a very, very long term, for a forever term is what he's calling it. Any spaces that you like for the very long term?
I think if you look at gold finance companies, that space is quite active, and that space one should be looking at. So effectively, the reasons is very simple, that the lending is quite secure. The gold prices have been moving ahead, and as when the gold prices move up, the LTV goes down, and that's advantage. And in fact, if you look at from a retail loan book, I think that's a space which has been the most active if you look at last financial year. And I think going forward also that space is going to be quite active with the secured lending. I think that space should be quite active, and I think going forward, gold always has a value, and gold financing will obviously take a lot of shape in India. So that piece is quite picking up.
Got that view, Radha. But the next question also coming in from Keshav from Chennai, Radha, towards you. He wants to know if Bharat Dynamics Limited is a key stock that he can have in his portfolio for the next 2 years. He's bought it around 1180, so very close to the current market price. What would you suggest? Rather, that's a question for you, yeah.
So I think BDL one should maybe take an exit right now. So more in terms of, I think with the ambiguity things happening, so maybe take an exit and then decide based on the quarter numbers. So that will be a good strategy in terms of Bharat Dynamics.
Got that view, Radha. But the next question coming in now, it's on Diffusion Engineers. It's a recent listing, and our viewer Raj from Jaipur actually holds shares at 265. So stock's trading very close to that price. He is asking if he should continue to hold on or exit this counter. Do you track this counter by any chance, Radha? If any, what should Raj do with this with Diffusion Engineers?
Frankly, we don't track this counter, but from a investment perspective, I think given the uncertainty, it's better that maybe we knock down few maybe related to pretty close to the cost price and wait for the uncertainty to get over. I think that's a better way of doing it in the given scheme of things.
Ruchit, any quick view that you might have on Diffusion Engineers Limited? And I know it's a very limited time frame, but any view on the stock?
Yeah, so not much historical data, but whatever short-term data is available, I think 290, 300 remains a major hurdle for the stock, at least for the near term. And until that is surpassed, the overall trend or overall momentum, I would rather say, does not look much positive. So I think we could see some time-wise correction or getting continued in the near term. But until the stock surpasses 300 levels, one should not expect any kind of trended basis.
Got the view, Ruchit. But the next question, and this is a caller for today from Vizag, and Mr. Rao has a stock query for us. Mr. Rao, good afternoon. Welcome to the show. What's your query?
I wanted to know about the Reliance Industries. Is it right time to buy now?
Sorry, which stock is that?
Reliance Industries.
Reliance Industries. And would this be a short-term bet or a long-term bet, Mr. Rao?
Yeah, I want to hold for 1 year.
For 1 year, got it. Radha, would you suggest buying into Reliance Industries at this point of time to Rao?
So I think we can look at a staggered buying in Reliance Industries today, although the stock is down given the news flow. But eventually, if I look at the sum of parts, I think with the Geo listing coming in, so effectively, I think it will be a good stock to own. But he can buy looking at it in tranches to take forward. So maybe he can start buying in tranches, and then as and when things unfold, we should keep adding that.
Staggered in tranches is what Radha suggests, at least for Reliance Industries. The next question coming in from Arvind from Mumbai, who is also a regular viewer. He holds 2,000 shares of Canara Bank, Ruchit, at this point of time at 160. So he is at a loss of almost 60,000 rupees. Ruchit, he is retired, so his question largely being, can those levels of 180 come back of the stock maybe in sometime in 2027 or in this year? A slightly more longer term view on the charts, what would you suggest?
Yeah, I think if you have such long-term horizon, then you should continue to hold on your existing positions. We have witnessed a decent correction in last few days, mainly because because of the market corrective phase. Immediate support for the stock is of around that 128, 127 level. But if I look at a bit longer term charts, then major support is around 119, 120. So I think we might see some more dip towards that 120, but that would be a good level from where we can again expect the stock to resume its higher degree uptrend. So hold on your existing positions if you have next 1.5 years point of view. Around 120 you can review again if you want to average it.
Got that view, Ruchit. And let's go across to our next caller now from Andhra Pradesh. Prasad has a stock query for us. Prasad, good afternoon. Welcome to the show. What's your query?
Good afternoon, sir. This is Prasad from Andhra Pradesh. sir. Hello.
Yeah, Prasad, I can hear you. Go ahead.
Sir, my query about Lemon Tree Hotels or Godrej Properties. Which one is better to enter fresh paying, sir, for long term?
For the long term, got it. Rather, Lemon Tree Hotels in the hotel and hospitality space or Godrej Properties? Which one is a preferred, if not one, both of them, is it preferable at this point of time for Prasad to enter for the long term?
I think Lemon Tree will be preferred over Godrej Properties because I think it's come to a correction phase. The hotel is doing well given the sector it operates in. We have seen a correction, and effectively, once I look at bounce back in terms of coming in, there's a lot of leisure and corporate travel in that segment, and with this tier 2, tier 3, tier 4 kind of a backup in this. So Lemon Tree looks good in terms of accumulation.
Got that view. We also have the impending demerger and the asset-light business model that Lemon Tree will be adopting very soon. So continue to monitor this stock at that time as well. But go across to our next query. This one's again, from Mayur. He's holding 45 shares of HDB Financial, bought since the IPO price, and that was almost at 740. Stocks broken the 600 mark yet again today and trading downward. He has 45 shares. He's asking what he should do, Radhav, for the long term. Would you suggest buying right now as an opportunity? Is it a good time to accumulate?
See, if you also hold it slightly for long term, you can still hold, but no suggestion to add. I think the stock has not done well in the post listing, and there are other good NBFC players available in that space. And I think that will be better rather than maybe adding here. Maybe for slightly medium to long term, you can hold on, but not do any average out or maybe adding at the current levels.
And Radha, if you can suggest a couple of names also that's on your radar in that NBFC space, because of course this is a lot towards the CV cycle, and a lot of those stocks like Shriram Finance also are not doing well right now. So anything that is in the NBFC space that's on your radar?
So I think I mentioned the gold finance companies can be looked at, maybe the top 2 or 3 of them. That can be added given the uncertainties involved. And given the gold finance companies have a big advantage in terms of putting it forward, I think those would be good bets to add on at this moment.
The next caller also dialing in from Hyderabad. Now Venkatesh has a stock query for us. Venkatesh, good afternoon. Welcome to the show. What's your query? Hi Venkatesh, can you hear me? We seem to have lost Venkatesh, but we do have a stock query on your screen right now. He's bought into Mazagon Dock, seems to be at the current, very close to the current market price. Ruchit, on Mazagon Dock, what would you suggest? It's been a volatile counter. Should Venkatesh continue to hold at this point of time?
The overall trend has not been positive if you look at last 4 to 5 months, along with the other names from the same sector. But one stock which has relatively fallen less or has shown a relative outperformance within the defense space is Bharat Electronics. So I think in case of any kind of recovery in the defense sector going ahead, BEL would be one which can take the leadership. And also in terms of the corrective phases, I think the relative outperformance could continue. So I would suggest to take a shift from Mazagon Dock to Bharat Electronics if you want to stay within the same sector.
Got that view, Ruchit. The next question now coming in. This one's on Sagility, and Jay Krishnan from Kerala, actually, Ruchit, is asking a 9-month view on the stock. And he is, of course, a regular viewer, likes the 9-month period quite a bit. But we had, on the fundamental side, Ruchit, analysts meet takeaways. On the charts, is that momentum visible? Is this a new bottom for the counter?
So the stock is trading around its medium-term support. 36 is a good support for the stock, and we have seen a pullback in the last couple of trading sessions from this. I think the risk-reward issue is definitely favorable if you look at next 6 to 9 months perspective after the recent correction. So you have positions you can continue to hold on. On the higher side, 48 to 50 would be the range to watch out for when it comes over there, whether it takes resistance there. But at current levels, I think yes, you can hold existing positions even if you want to go create fresh longs. Then keeping a stop loss below 34 rupees, you can attempt fresh longs as well.
Got the view, Ruchit. But the next counter that we're focusing on is PFC. Now, Lalita from Bangalore, who is a regular viewer, holds shares at almost 416. Currently sitting on a slight loss. Asking what she should do at this particular juncture, Ruchit, what would you suggest? Is the arbitrage playing between PFC as well as REC at that point of time, and which one is a better counter according to you?
I think PFC seems better if you do comparative analysis within both. But I would also suggest to keep a strict stop loss below 380 on your existing long positions. The stock is in a consolidation phase since last 1 month. The good thing is that this entire sideways move which you have seen is above its 200 EMA support. So the mid to long term momentum seems to be on the positive side with 200 EMA acting as a good support. So till it is above 380, I think you need not worry much. You should get a good exit price. Once the dust settles in. But with a stop loss below 380, I would recommend to hold on PFC only.
Got it. So 380 is the level to watch on PFC. But viewers as well as Ruchit and Radha, time now for the rapid fire round in this edition of Ask Profit. Please keep your answers on buy, sell and hold so that we can take as many in the next couple of minutes. The first one's coming from Ramesh on Paras Defense. He's bought shares at 713, Radha. Should he continue to hold, average down at the current market price?
No. Sell.
Sell. Got it. The next query coming in is on VMart, bought at 542. Ruchit, should he continue to hold his 80 shares is what Sushant is asking.
Still on the right should be the strategy.
Next one's coming from Vignesh from Bengaluru. Now he's holding shares of Electro Steel bought at 180. Ruchit, any quick view on the stock that you might have?
Trend is negative. We have seen some pullback. 200 EMA resistance would be around 88. So you can look to exit around 88.
Zaggle bought at roughly around 300 rupees per share by Giridhar. Would you suggest him to continue holding Radha at this point of time?
I think we hold on onto the stock, but not add.
Happiest Minds bought at 450 by Lavanya. She wants to know what she should do with the stock now. What would you suggest, Ruchit?
Hold with stop loss below 360.
The next question coming in is from Bharat from Andhra Pradesh, holding on to Quality Power at 916. Recent listing yet again, Radha. What would you suggest for this counter?
I think you should hold on.
Hold on, got it. Srinivas wants to know a short-term view on Jupiter Wagon, Ruchit. He's bought it at 305. What should he do with his 200 shares?
The short-term trend seems negative, so look to exit on any pullback moves.
CC Avenue, also Infibeam earlier, Ruchit. Our viewer has bought it at 16 rupees per share. Should he sell out, move out of this counter? What would you recommend?
There's no positive signs yet, so I would recommend to take an exit.
The next one coming in is from Ravi from Qatar. He wants to know about HDFC Bank, bought at 923. Is it a good time to accumulate more Radha right now?
I think he should exit. Given the news flows, he should not take a call.
Any view on Jio Financial, Ruchit?
Seems we would see some consolidation in the near term. If existing positions are there, should hold on.
Petronet LNG, is there a similar view that you have, Ruchit, on the charts for this one?
No, the short-term trend is negative. We have seen volume-based selling, so it can correct towards 225.
The next one coming in is on ITC Hotels. What would your view be on this one, Radha, at this point of time?
I think it's a good add to the extent.
Aisha Motors is the other one. What would you suggest for this counter as well, Radha?
I think it's also a decent add at this price point.
The next question coming in, it's on Sirma SGS. Is it a good time to add more, Ruchit? Is the momentum continuing on the uptrend?
Hold existing positions. Any dips towards 720 could be used as an opportunity to add.
SBI is the other counter. Is the momentum on the upside done, or should he continue to hold right now?
I think he should continue to hold.
Ruchit, sorry, you can also go ahead with we'll get both of you on the last stock for today.
Yeah, so 200 EMA support will come around 970. So I think if it comes towards 970, it would be good levels to add on.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Ruchit as well as Radha, thanks so much for helping us solve all your stock related queries. But viewers, all the time we have on this edition of the show. Thanks so much for watching and sending in your queries. Do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who built the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 20
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And Hiral, it seems like
It's the midweek market holiday. The bulls took leave yesterday, obviously, like everybody else, but they didn't come back today.
Exactly, they've not come back. When will they come back is the question, because
next week is also several holidays, right?
2 holidays, so it's a truncated week next week as well, so volumes are going to be thin, but we are at the day's lowest levels on Nifty 50. We've broken below that 22,900 mark, and that's what we need to actually take into consideration. A 400 points downtick right now, 1.8% there, and your broader markets are pretty much in tandem with what Nifty is doing. I think the cuts are deeper when it comes to Bank Nifty, 2.5% shaved off in terms of banking majors, Alex.
Yeah, absolutely. Let's pull up the heat map for the Nifty 50 and we'll tell you about what is moving the needle. So mostly red on the screen, just about 7 stocks in the green holding out, right? ONGC, TCS, Wipro, so the IT majors, but a few of them have actually fallen into the red, whereas earlier on at the start of trade today, you had gains on the screen for a few more of the IT majors. What else? On the losing end right there, I think the stock of the day, Tata Motors PV, but also Reliance Industries is losing quite a bit of ground. And if you look at the contributors chart, which we should do next, you will see HDFC Bank, you will see Reliance Industries. Let's pull up the contributors chart, because there you go, those two counters right there, the heavyweights, and followed by the other banks. So 3 banks out of 4, 3 banks and 3 frontline banks losing ground.
And to look at the opposite side of it, there's not too much weightage which is trying to give support at all. I mean, 18 points is nothing. So you know where we are actually headed to with this kind of a closure in trade today. Go on.
The other thing is, I want to pull up the intraday chart for the VIX, because the India VIX is at 26 plus. At least last I saw it, it's heading towards 27 and it's up as much as 8%. So that elevated volatility here heading into the weekend.
Elevated volatility here. Let's just pull up the advanced decline ratio and then we should look at the broader markets as well in terms of the components. The advanced decline ratio, categorically the mouth is widening. Not to that extent, the greens are still only 300 versus 2,200 declines, pretty much where we started off. So there is that bearishness which continues in terms of where markets are concerned. And in terms of components of NSE 500, let's just look at that and see what's happening. I mean, a gain of 4 to 10%. HEG, Graphite India are the ones which are seeing some smart moves, but ONGC again, it's a crude beneficiary. What's losing out is a Spark, PCBL, Ease My Trip, Godfrey, Mahindra Life. I mean, it's a whole host of sectors. There's no particular direction that you're seeing in terms of BSE 500 as well. So that's what the market picture is looking like. But let's quickly look at the factors we should be watching out for. First up, the 2-day winning streak is what Nifty 50 has broken. That's clearly evident from what you're seeing in terms of the chart. And we've fallen as much as 400 points in trade. Your defensives, which is IT and pharma, these have been the only saviors in the market, but they've also kind of given up the kind of gains that we were talking of at the start of the session today. Banking majors clearly underperforming the benchmarks, and that was seen from the contribution that HDFC Bank, SBI and ICICI Bank are giving to Nifty 50 on the downside. Your PSU banks have been the top sectoral losers in trade as well. 22,900 now is acting as the clear support level, which has already been broken. So we know where we are headed from here on. Below 22,900, the bearish structure is something which is reconfirmed, and the resistance now is coming in at levels of around 23,000, which is a psychological resistance. And after that, the next level you should be watching out for should be 23,100. Now, clearly, it is a dull day of trade. For the last 2 hours, the market has been range bound, and we're talking about a range between 22,900 to 23,000. So it's just 100 points range that we're talking about. And very lastly, your cash market turnover is down 10%, very similar to what we saw in terms of Wednesday's session, while the F&O market turnover has been flat today, which was also under pressure, which was down, I think, 10 or 15% on Wednesday's session as well. So that's what the picture is telling you in terms of the setup so far in that last hour of trade. Let's get in our guests. We have Kunal Shah from Mirai Asset, Sher Khan and Samir Dalal who are joining in. Welcome to the show, Kunal. Let me take my question with you. With the way the setup is right now, clearly we've entered that bearish tone in terms of markets. 22,900 is what we've broken as well. What are you watching out for? Because again, next week is a truncated week.
Good afternoon to everyone. So I think this was a little bit unexpected from the markets as well. We had surpassed the hurdle of 23,000 on the upside, and then we headed towards 23,400 mark. We were expecting this move to at least continue towards the mark of 24,000 on the upside. Now again, the support, as you has mentioned, 22,900 has been broken on the downside. Your India VIX has again started to pick up, so there is going to be volatility as well. Even today is the weekly close as well for the Nifty index. Again, we are going to have a doji candle indicating indecisiveness. So I think better not to carry any positions, whether on the long side or on the short side, because there are gap ups and gap downs that is likely to happen even on the Monday trading session. However, said that, I think approach for the Nifty index should be taken on a daily basis. Firstly, I'll be watching out for the 20 hourly moving average for the Nifty index. That is placed at 23,050. Till the time that is not taken out, I'll not be aggressively on the long side. So you will be cautious at the current levels. I will not even say be aggressively on the sell side as well. Yes, the undertone is on the bearish side, but I'll probably wait and watch, not take a trade on an index and go for the weekend. Similarly, for the Bank Nifty as well, I'll again wait and watch. Even for the Bank Nifty index, I was expecting this move to continue on the upside towards 55,000. Again, unexpected, that has happened today. Even for the Bank Nifty, any bullish trade to be taken has to be only above 53,000 on the upside. If that is taken out, then one can probably go aggressively long on the Bank Nifty. At the current levels, even Bank Nifty on the weekly chart is forming a doji candle, again clearly indicating indecisiveness. So there is no trade on index perspective. It's better to avoid the headline index at the current levels.
It's one step forward, 3 steps back for the Indian equity markets. And good afternoon to both of you. Samir Dalal joining us as well. Before we go to Samir on some of the key stocks of the day, let me come back to you though, Kunal, on individual stocks that you're seeing. Are you still seeing opportunities?
I think very few. First stock, what I'll look on the long side over here is Glenmark. Again, looking technically strong on the chart. There has been a rounding base formation on the technical charts, and follow buying momentum is what we are seeing. So good opportunity to add on to the stock on the long side. 2175 is where it is currently trading. One can buy this with a stop loss of 2100 and looking for targets of 2270 to 2300 on the upside. So Glenmark is one stock which is looking on the buy side. On the sell side, I'm looking for a sell opportunity, and that is on TVS Motors. So TVS Motors in the previous week had already given us a rising trendline breakdown, and the stock has entered into the corrective mode. It has been taking rejection at the 20 DMA, placed at 3568. So that is a sell for me at the current levels. 3476 is where it is currently trading. One can keep a stop loss of 3600 on the upside and look for downside targets of at least 3200 to 3160 on the downside.
All right. The stock that we've picked for stock of the day is actually a stock that Samir has quite a clear view on. So we'll come to him in just a bit. Let's first lay it out though. It is Tata Motors PV. It's trading at very close to the low point of the day, and seems like bad news for this particular counter does not seem to stop. And in the latest, of course, Jaguar Land Rover has reportedly decided to shut its Solihull facility for a period of 2 weeks. This is partly what was already planned, but there's more at play. Let's go across to Puneet to give you a sense of why this is important. Puneet, this is only the latest in a spate of bad news, and this is on the back of a pretty bad quarter as well. Why is this important?
Well, thank you for that. It's definitely the third such instance where you're seeing a production cut for FY26. So temporarily suspended production at one of its plants in the UK for 2 weeks is where the suspension is. And the reason that the company has mentioned is because of a supply issue. Now, bad news, as you rightly mentioned, Alex, continues to follow the company, because you've seen that the affected area is also affected timeline is likely merging with the pre-planned Easter holiday timeline as well, but they will still lose about 7 to 10 days of production in Q4 as well as spillover to Q1. Now, this comes on the back of an impact that we saw in the month of August as well as September for the company in terms of a cyber attack, where they lost 1 month's production of almost 50,000 units, which was split between a couple of quarters, Q2 and Q3, and that itself cost roughly £260 million of lost sales as well as expenses that the company added. Now, apart from that, also 2025 in April is where they lost production because of the tariff impact. So cars were stopped essentially from the UK going into the US, and hence the impact. But when you look at the slump, now this is from November till February of 2026. It's while the numbers have actually gotten better post the cyber attack, you've seen still a 19% fall in Feb 2026 versus 37% fall in the month of November. And the sales, which is expected for FY28 for Jaguar and Land Rover in a single financial year, will not be even close to what they did in FY25. So they did almost 4 lakh units, a number that they did consistently since FY19. The estimate's only 3,80,000 from multiple brokerages, and this is an average summation of that number. So the next 3 years seem very difficult for the company. The first one we've seen in FY26. And that's largely the picture, Alex, because the next 3 years also, the sales are not going to recover back to the FY25 mark. And this year is very imperative, a new CEO with PB Balaji, but also the whole makeover of the Jaguar brand going all electric.
Okay, this is an interesting development. Thank you so much for that, Puneet. In fact, let me take this one with Samir. Samir, Tata Motors PV has been one of your favorites as well. How are you looking at it now with JLR again holding production? And as Puneet brought to us, the kind of impact it could have in terms of production. What would you have to say on this one? Would you have a change in opinion?
No, I don't have a change in opinion. I still remain very, very bullish on JLR and Tata Motors PV. And let me give you my reasonings, okay? So why have they cut production? We obviously know that there is a massive slowdown in the Middle East when it comes to sales of cars because of the issues that are happening out there. So when you have a situation where you're not able to sell, there's no point producing and holding on to inventory. We do not know when the recovery will happen because this could be a little prolonged, right? But having said that, are we of the opinion that this war is like a never-ending war that we have in Ukraine and Russia? I think that's highly improbable because I'm sure Iran is running out of ammunition. And at some point, the US is also going to say that the cost is not worth what they're putting in at this point of time. So it has to come to an end. Whenever it does, what you will see is slowly things will start to stabilize in the Middle East. And eventually, maybe 2 months or 3 months down the line, you'll see a demand uptick, and then you'll see a backlog of uptick also. So you'll see a sudden spike. Now, JLR in the current year has gone through a lot of problems. In Q2, they faced the cyber attack because of which production stopped, the resumption of which started in Q3. So, a lot of the negatives have come into the system in the current financial year. So the year has been a washout for them. Are we saying that this kind of system is going to keep happening for them going forward? I don't think so. So when the recovery starts happening, which we think will be maybe a month from now, or maybe 2 months from now, what you will see is people will start looking at it from a different perspective. So you're getting it at a decent value. If you look at normalized earnings, barring the one-offs that have happened in the current financial year. So that is the first point. The second point that I want to make is that we got to realize that it's not, we are focusing on Jaguar Land Rover, but it is not only them, it's all over the world. Production is going to get affected for cars, including the others, Mercedes, BMW. We just don't discuss them as much because we don't have any exposure to them here in the Indian market. So this is an industry phenomenon. This is nothing specific to Jaguar Land Rover. And if they can use this time to get their refurbishments and plant maintenance done, all well and good. So it helps them when, production is up and running, they don't need to take a shutdown. So I don't look at it as a massive negative. We still have to look at things from a longer term perspective when you're a fundamental analyst. Right now when I'm talking and the stock is going through this pain and, the profits are looking weak, everyone is probably wondering why is this person being so optimistic? But a year and a half from today, when actually things are stabilized and things are growing and the stock is up, that's when people, the whole world and the bandwagon will come jumping in.
Sure.
And you'll have the opportunity.
Okay. All right. So positive, and there's quite a bit that has to change for Jaguar Land Rover over the course of next year as well, not least of which is the transition that Jaguar itself is making towards electric vehicles. Kunal, I want to come to you on a couple of frontline stocks, HDFC Bank and Reliance Industries. Reliance Industries in particular is among the top losers on the Nifty 50. In fact, if anything, I'm going to try and find out, it's the third biggest loser with cuts of 4.8%. and proving to be quite the drag on the benchmark, and HDFC Bank not too far behind. In fact, close to 20 constituents of the Nifty 50 are trading with cuts of over 2%, and quite a few of them are losing over 3%. So what's the call on these two heavyweights? That's practically 20% of the benchmark as losing between 3 and 5%. You're on mute.
Firstly, for Reliance, the stock had already made a double top somewhere in the month previous, where it was in January, where the stock had made a double top formation. Post that, we had seen the correction starting in, and now we are facing this rejection at the weekly 20 moving average, that is 1430. So till the time that is not taken out on the upside, there will be no buying momentum that would be coming back. There was consolidation which was happening on the lower levels, and then again we have seen a breakdown. So I think the recent low of 1300, what Reliance had made, that will be very important. If that is breached on the downside, then you can expect a gap area to be filled on technicals on the downside towards 1180, 1190 zone. So I think I'll not be a buyer at the current levels for Reliance. 1430 is something what I'll be looking out for. If that is taken out, then probably one can go aggressively long on Reliance. But overall, the long-term structure still continues to be on the weaker side.
Fresh lows for the rupee in the meanwhile, and we continue to head lower, possibly closer to that 95 mark, as unprecedented and unexpected that would have been even last year when the tariff conversation was front and center. We weren't thinking about 95 on the Indian rupee, right? So it is a balance of payment issue, and the fact that the government is taking steps to curtail the impact of higher crude oil prices currently. But let's go across to Somit Sarkar with what the chatter from the dealing rooms is. And it seems, Somit, that just over the last half an hour, 45 minutes or so, the selling has intensified. What is the word from the dealing rooms?
Well, the sentiments are not at all optimistic given the fact that there is no clear direction firstly in the market, and these 2 days of gain and then 1 day of big loss, that has led to much more losses for retail investors and for dealers as well. Hence, the sentiments are not at all optimistic throughout the broking rooms that we are seeing. And if we close below 22,900 today, then this clearly reaffirms the fact that overall the structure or the market continues to remain quite bearish. So closing about 22,900 would be crucially important for the market in trade today. Few stocks still which dealers have highlighted where there are some flows that they are seeing. Firstly, when it comes to Tata Consumer, they are indicating that there are some DIs who have been actively buying this counter at lower levels in trade. Delivery volumes could be as well on the higher side. So despite the weakness that we are seeing in the market, that stock is down just 0.3% in trade. LIC Housing, that has been on an uptrend. Strong buy flows on the FI desk is what dealers have highlighted. Cheaper valuations, and if there's a potential repo rate hike, then this counter could benefit out of that. And that is also one of the reasons why there are some buy flows when it comes to LIC Housing Finance. For Newland Labs, there are buy flows on PMS desk. Dealers are indicating that the export data for the month of March is quite strong for this counter. So it will be interesting to see how these numbers pan out post the March, and these numbers will come out. So it will be important to track, but early signs are that the March numbers would be quite strong for Newland Labs. And lastly, when it comes to Page Industries, there are some buy flows on the large HNI desk at lower levels. Dealers indicate that management in one of the conferences has maintained its guidance and they are expecting a double-digit growth on the revenue front and margins to be anywhere between 19 to 21%. They have reassured their guidance, so that as one positive commentary is what dealers have highlighted, and hence there are some buy flows at lower levels on the large HNI desk.
Got it. All right. Thanks so much, Somit, for getting us those details. So Page Industries, Newland Labs, LIC Housing and Tata Consumer on Somit's radar with regard to what he's hearing as a buzz from the dealing rooms. Let's go across now to Alistair Newton, Chief Executive of Alavan Business Advisory. He's joining us live from Zambia. Alistair, thanks so much for taking the time, and good afternoon to you. What's the perspective on what is happening, first of all, in West Asia, and what's the sense that you're getting? I'm not asking from a geopolitical sense. I'm asking about how the market as a whole is viewing this, because it's not seeming like it's going to be a conflict that gets resolved very quickly. Is that being priced in?
I think you're right that this conflict is not going to be resolved very quickly. I also don't think it's being priced in properly. First of all, obviously we're seeing a lot of volatility in oil markets, and that in turn is driving volatility in both equity markets and bond markets globally. We saw after Donald Trump extended his deadline for the Iranians to agree to what I think is a Hail Mary 15-point peace plan, we saw oil drop by about 6% last night. It pushed WTI down below $95 a barrel, which seems to be some sort of pain pressure point for Donald Trump. Every time we see WTI, which of course is his major metric, going towards the 95 to 100 band, he seems to come out with some emollient statements. Now, WTI has gone back up again since he spoke yesterday. I think that could be in anticipation of a pattern which has evolved over the previous 4 weeks, that Mr. Trump always seems to be taking a hard line over weekends when markets are closed, and then being more emollient on Monday morning after markets open up again in Asia. We may well see that pattern repeated over the course of this weekend. Let's keep in mind that yesterday he did also say that if Iran didn't agree to a cessation of hostilities, the US would become Iran's worst nightmare. The other thing which markets are not taking sufficiently into account, in my view, is Lebanon. There is a huge conflict going on there between Israel and Hezbollah. And although markets are saying, well, there's no oil there, so why should we worry? I think investors need to be very mindful of the fact that the IRGC is standing shoulder to shoulder with Hezbollah in Lebanon. Iran will not sign any sort of peace agreement, cessation of hostilities, ceasefire or whatever, as long as Israel is attacking Hezbollah and the IRGC forces in Lebanon. So the Lebanon conflict does have a very direct bearing on what happens in the Strait of Hormuz.
Okay. Alistair, good afternoon. This is Hiral on this side. Everything said and done right now, the key question is, what should someone do when it comes to reacting to markets? Because one, either you sit on dry powder. Two, you can probably start deploying because you're off those highs in terms of valuations as well. And the third option is just wait and watch. I mean, you know, what's your advice to investors then?
Well, first of all, I'm not a market strategist. I'm a geopolitical strategist. So your viewers should feel free to disregard anything I say on account of how they should play it from a market perspective. Clearly, we do need to continue to try to anticipate what Donald Trump is going to say next on Truth Social or whatever, because markets are moving according to the Trumpian rhetoric to a significant extent, particularly as I intimated in what I said a moment ago, oil markets in the first instance. A second marker I would point to, however, which I think has been quite well documented by those who are more expert than I am when it comes to bond markets, is that the administration in Washington also seems to get nervous whenever the US 10-year starts to approach 4.5%. Now, I know that there is this idea that Donald Trump reacts to equity markets, but let's look at Donald Trump's pre-political career as a realtor. If there's one thing he really understands, it's debt. And I do think he is perhaps even more susceptible to bond markets going against where he wants them to be, US interest rates in particular, of course, than he is even to equity markets. And I think we've been seeing that as a pattern since the so-called Liberation Day on 2 April last year, nearly 12 months ago now. I think Donald Trump is susceptible to adverse movements in US treasuries. And I do think that market participants need to be keeping an eye on that as well, perhaps even more so than equity markets. So oil and bond markets would be my two markers for market participants to follow very closely, trying to keep ahead of the curve on both counts and looking out for what Donald Trump comes out with, or indeed Scott Bessent for that matter, which may be designed to, shall we say, make sentiment more favorable from a US perspective.
Thank you, Alistair, for that and being gracious enough to respond to a market question when your expertise is more in terms of geopolitics. And to tie that up with it, my question to you is now, from here on, how are you seeing escalation to de-escalate, you know, as a strategy? Because that's what everyone is talking about when you talk about what Donald Trump is doing, how the GCCs come and play their role as well, because they have been the ones who've been called a very neutral land, which no more is the case, it seems. And then when India comes into the picture, how are you looking at India's position as well in terms of being a negotiator?
Well, I think let's deal with the last part first. There's quite a few countries running around at the moment trying to act as mediators. Pakistan, Turkey, Egypt. I guess the Omanis are still in the mix somewhere. I think the problem with acting as a mediator right now, be it India or one of the countries which is already engaged, the practical problem is that the Iranians are not ready to call a halt, even if Donald Trump is, and that's an open question to which I'll return. And furthermore, Benjamin Netanyahu is not ready to call a halt at this stage. I think there has been a certain amount of rhetoric over the course of the last few days, which has been suggestive of this idea that Donald Trump can call a halt anytime he wants to. He can't. I don't think he necessarily has the wherewithal to stop Netanyahu, let alone to get the IRGC, who are calling the shots in Tehran to all intents and purposes, to agree to a ceasefire at this stage. We've seen their rejection of the 15-point plan already. So this basically leaves Donald Trump to come to the first part of your question with two options. It's either escalation or capitulation. And I include in capitulation something he hinted at about a week ago, which is that he may just walk away from all this. It's not impossible that he would do that, declaring victory along the way, even though there is a respectable body of opinion in my area of expertise, geopolitics, which says that as long as Iran controls passage through the Strait of Hormuz, America has effectively lost this war. And let's keep in mind, too, that escalation and ultimately capitulation in some way, shape or form are not mutually exclusive. There are more US ground troops moving into the area. I think it is still the case that nobody can call how this is going to end with any degree of certainty, or indeed when it is going to end. But I do think there is a better than 50% probability that things are going to get worse before they get better, not least from a market perspective.
A quick last question. I'm just squeezing one in, even though we're out of time, Alistair. But what is the worst case scenario, in your opinion, in the next week or so? You've pointed to the buildup of ground troops. They've been deployed from the US, and that presence has been building, even as we have a so-called cessation of targeting of energy infrastructure that was announced overnight by Donald Trump. What is the worst case scenario, in your opinion?
Worst case scenario, in my view, is that the Americans or the Israelis do something which provokes Iran into attacking desalination plants in the GCC countries. This is the biggest fear of the GCC countries. They are highly dependent, just on humanitarian grounds, let alone economic, on their desalination plants. If we were to see an escalation into wholesale attacks on desalination, this would be massively worrying. And I think in those circumstances, you would see a very big market sell-off indeed.
Alistair, always a pleasure. And I'm going to put it out there. I would love to speak to you again. And given the way that this conflict is going, I'm pretty sure that we're going to have to talk again, because our viewers will certainly benefit from your insight. Thanks
well,
so
I'm
much
very happy to do that, but you realize that you may actually be having to get me to say, well, I was completely wrong when you spoke to me on the 27th of March. Such is the uncertainty out there.
I seriously hope that that is the case and the conflict gets over by next week, in which case I will call you to congratulate you. Thank you so much for taking the time.
Okay, thank you. Bye.
Bye. All right, well, on that note, I'd like to thank both our experts, Kunal and Samir, and apologies to the both of you, because that last conversation I thought was relevant, and to have a longer conversation on that, right? So thank you so much for taking the time, both of you. Okay, let's talk about one of the major stories of today, and this is reacting to the fact that oil prices have remained elevated, and the government announcing that it is revising its fuel duty structure, cutting the special additional excise duty on petrol and diesel by 10 rupees each. This is a measure to protect the consumer. First, let's listen in to Finance Minister Nirmala Sitharaman speaking about the government's announcement. Listen in.
देश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
Okay, so that's the word coming in from Finance Minister with regards to where the excise duty cut goes. But let's understand the impact now from Somit Sarkar. Somit, impact one in terms of OMCs and the exchequer.
Well, definitely this news that has come in is quite positive for the oil marketing companies. But there are two reasons why oil marketing companies are still not cheering this reduction in excise duty of 10 rupees per litre. Firstly is the fact that one of the private players, Naira, has hiked energy prices or petrol and diesel prices by around 3 to 5.3 rupees per litre. Now, Naira has a market share of around 8.3%, and the second one is the losses on the marketing margin side when it comes to petrol and diesel still continue to be on the higher side for the oil marketing companies. Dwelling firstly on the first point, now Naira has hiked the petrol and diesel prices and they have a meaningful market share of around 8.3% in the retail fuel market. So what will this do now is that there will be more market share shift towards oil marketing companies. Now on a normal day, this would have been a quite positive news. But today, the fact that they are incurring losses on sale of every litre of petrol and diesel, and if more market share shifts towards the oil marketing companies, then the losses for them will also increase going forward. So that is one reason why oil marketing companies are actually not cheering this reduction in the excise duty. And the second one is, as I mentioned, that the losses continue to remain on the higher side. And now earlier, as per analysts, the marketing margin loss stood at anywhere between 43 to 49 rupees per litre, and this 10 rupees reduction in excise duty will reduce the losses by just 20%. Despite this, the marketing margin loss continue to remain on the higher side of around 33 to 39 rupees per litre on blended basis, which means that by selling every litre of petrol and diesel, they are incurring a loss of anywhere between 33 to 39 rupees. So these are broadly the two reasons why why oil marketing companies are actually not cheering this reduction in excise duty. And this reduction in excise duty will have an impact on the government's financial as well. On an average, India consumes close to 170 billion litres of petrol and diesel on an annual basis, and this will lead to 1.7 lakh crore of loss for the government on an annual basis, which is nearly 5% of the gross revenue for the government. But again, these numbers are on annual basis. Now it remains to be seen for how long this reduction in excise duty prevails, because then that will decide what's the actual loss that is coming in for the government of India.
Thank you, Somit, for that. In fact, let's get in Prabal Sen from ICICI Securities. Prabal, welcome to the show. Hiral on this side. My question to you is, how are you seeing this benefit in terms of where OMCs go in terms of the financial impact? Because I was just reading right now from the press release where they are saying at current international crude prices, the under recoveries stand at approximately 26 rupees per litre on petrol and around 81.9 on diesel, and the combined daily under recovery, which is being absorbed by OMCs, is approximately 2,400 crores. And the excise reduction offsets rupees 10 per litre of those losses, ensuring that OMCs can continue to supply fuel without disruption while keeping retail prices unchanged. If you have to take this 2,400 crore rupee number into consideration, what do your calculations actually tell you in terms of impact?
So first of all, I think, the under recovery number that you mentioned is probably based on the Indian basket of crude. It is important to remember that the Indian basket of crude has a substantial weightage for Dubai and Oman crude, which is not really the price that is being paid, because those crudes are not the ones that are being purchased right now. Dubai and Oman, till about yesterday, were trading at a $50 premium in the physical market to Brent, if one has to rely on published numbers. And therefore, it's sort of probably increases the under recovery number slightly more than what it should be. Having said that, I think I completely agree with what little I could get of Somit. I couldn't quite hear the audio, but what I could see was that, the number mentioned was 48 odd rupees on a blended basis. Our numbers pre this change were also closer to about 42 rupees. And therefore, with this reduction, the excuse me, the incidence of these retail margins is obviously reduced to quite a extent, but it still remains fairly significant. So as of now, with GRMs being what they are and with retail margins being what they are, I still think that OMCs are not really